Yeah. Yeah.
Sometimes these updates, like, they take longer to come over the sea.
Okay, no worries.
It'll take longer.
Yeah,
to do the overseas travel.
Yeah. Okay, guys, so we are starting the live stream. Welcome everyone to the Q4 Rocket Lab earnings live stream. We have Matt Money and Scotto with us. I'm hoping Miss Iglesias can also come, and we go straight into it because there is releases, press releases.
Yeah, so I just kind of had a cherry pick. We'll go over these kind of quick because the actual earnings are out. So the headlines: Rocket Lab completes spacecraft commissioning for NASA's Escapade Mars mission. That's pretty cool. We're not going to bother reading through the full article because I'm sure a lot of this will go over on the call. And there are a couple other pieces of news that are probably a little bit more pertinent to our attention ahead of the call. Is this the next one? Yeah, so Rocket Lab's pulling out the buzzwords for Q4. We got Rocket Lab introducing advanced silicon solar arrays to power space-based data centers. Surging AI and compute demand pushes terrestrial data centers to their limit. Space-based data centers can harness infinitely abundant solar energy in orbit thanks to Rocket Lab's rapidly scalable silicon solar arrays. So I'm not sure if that's what's been kind of cooking at Solero. They've been building towards something. Those facilities have been increasing their capability by quite a bit over the past couple of years, a lot of which was already paid for. The last piece of news that will go before we're going into the actual earnings is kind of a big one, which is kind of leaves me scratching my head, is Rocket Lab acquires Optical Support Inc., strengthening national security payload capability. So I want to hear what you guys think about this, because it sounds like there's a bit of trouble in paradise regarding the Mynaric acquisition. There seems to be like a little bit of like a German company slipping the name at the moment. I want to say Heimdall, but that's not it. That's one of the
Rheimdall or something.
Rheimdall, yeah. So it sounded like there was maybe a bit of a bidding war going on between Rocket Lab and this company, but I'm wondering if maybe that's just canceled outright, especially with this news of.
I don't think you can cancel a contract outright, and I don't think if you have signed a contract that somebody else can just come in and bid over you. Yeah, I'm not sure what's happening. I don't think it's an issue yet. Maybe they mention it on the earnings call. We see.
Okay, Maddie,
I mean, it's like if.
I don't know if I've digested it enough to make an opinion yet.
Okay. Do you guys want to read through this, or should we hop over to earnings? How do you guys want to handle this? We got plenty of time.
I think we should hop over to the earnings, and then I'm dying to know what's in there because it's like Neutron updates and.
Yeah, there's a big Neutron update if you haven't seen it yet, Vince.
Okay, we'll go to the proper presentation. Or Vince, did you have that up already? Do you want to do it on your end, or do you want to do it on mine? What do you prefer?
I can do it here. So this is the Q4 investor update. Financial highlights. So record annual revenue, 602 million. Strong annual growth, 38% revenue year over year. Record quarter, 180 million for Q4. That's 36% up versus Q4 2024. Record backlog, 1.85 billion at the end of Q4 2025, a 73% increase from Q4 2024. Record gross margin, 38% GAAP gross margin. That's very nice. And wow, 44% non-GAAP gross margin. I mean, that's fantastic. Business highlights. 21 launches, new annual record. I don't know if I should read all these. Neutron qualified Hangar Hippo fairing, completed Launch Complex 3, on-ramped to the NSSL launch program, entered major qualification campaigns for flight hardware. Space Systems awarded an 816 million prime contract to build missile defense constellation for Space Development Agency. Escapade Mars mission launched for NASA. Record growth of Space Systems components business acquisitions. acquired Geost, expand national security capability. Acquired Optical Support Inc., leader in high precision optical and optomechanical instruments. Acquired Precision Components Ltd., a new one. Both is new. Expands manufacturing capability for precision launch and space system components. So Electron, small launch leader again. Electron remains the only reliable high launch cadence rocket dedicated to small satellites. 0 new entrants in Western small launch markets. There were no successful orbital launches of a new small rocket in 2025. By the way, since I'm reading this, like I cannot see the comments, I don't see anything. So feel free to interrupt me if you guys want to say something. Hypersonic testing is a national priority. Rocket Lab is delivering 3 HASTE launches in 2025. Next one on the pad for Q12-6 launch. Q1
2026, Vince. You got it. Keep it up. You're doing great.
Rocket Lab is the only credible provider that has demonstrated the ability to meet Department of War hypersonic launch targets at the rates needed for Golden Dome and other initiatives. Record year for new launch contracts. 30 plus launches booked in 2025. Freaking amazing. Diversified customers. U.S. national security and defense. Commercial constellations. New and returning customers. International allied governments. 4x launch deal signs with Black Sky in Q4. Brings total Electron launches booked by Black Sky to 17. Signed launch contract with new confidential customer to support national security. Wow. 21 launches in 2025, 30 plus launches booked. Strong growth for both bookings and execution. Space systems. I'm dying to know about Neutron. So Rocket Lab is the preferred disruptive new prime. 860 million contract to build Space Development Agency constellation of 18 advanced missile warning satellites. Okay, I'm not going to read those small points. Mars mission success. 2 Rocket Lab built satellites for NASA and the University of California, Berkeley's Escapade mission successfully launched, commissioned, and headed to Mars. Mission success, on time, on budget, deployment, commissioning, trajectory correction, maneuvers, preparing to hand control to UCB next month ahead of science operations beginning. Opportunity, Mars telecommunication orbiter. MTO is fundamental to NASA's Mars objectives. Search for signs of ancient life, understand the red planet's climate and geology, prepare for future human exploration. Spacecraft built for NASA on-orbit fueling mission. Vertically integrated launch plus spacecraft mission. One of only 2 U.S. companies with the ability to build and launch spacecraft. On-orbit technology demonstration of a cryogenic fluid management system for NASA to advance technologies that could support human space exploration. Introducing silicon solar arrays. Space-based data centers, commercial mega constellations, national security programs. Silicon solar arrays. I'm probably not saying it correctly. The satellite industry is projected to grow 7 times by 2035. Space-based data centers are on the horizon as AI and compute demand soars. Geopolitical challenges are constraining supply of critical minerals used in traditional solar cells. Solar power supply chains are at risk of failing to keep up. Solution is silicon. Rocket Lab already has the world's largest installed production capacity for gallium arsenide and germanium based on solar arrays. Now we're expanding into silicon, enabling the mega constellations and national security missions of today, as well as gigawatt class, kilometer wide scale, space-based data centers of the future. Also enables hybrid solar arrays solutions that incorporate both high efficiency and silicon solar cells to leverage the benefits of both technologies and enable adaptable and scalable solutions for any mission. Strategic acquisitions. Okay, Mynaric, Laser Optics, Germany, in progress. Undergoing regulatory review process with German government, working closely with regulatory authorities to satisfy foreign investment requirements. So no sign of trouble mentioned here. Optical Support Inc., United States, closed in Q1 26. leader in design and manufacture of custom high-precision optical and mechanical instruments for NetSec and commercial satellites. Key supplier to GEOS subsystems used in Rocket Lab optical systems, payloads for space protection, space domain awareness.
Shit. I'm a couple
Yeah?
slides ahead. No, go ahead. You're good.
Okay. GEOS payloads. Closed Q3 2025, leading the developer of electro-optical and infrared sensor systems for national security space missions, establishes Rocket Lab's foothold in the payload market. Precision Components Ltd, it's a New Zealand company. New precision machining complex established in New Zealand with acquisition of PLC. Significantly expands large volume manufacturing of high-tech, high-tolerance components for our global space systems customers, as well as growing Electron production rate and Neutron development. Unlocking high-value satellite opportunities. So yeah, GEO, LEO, Wolverine ground station. Wolverine is an optical ground terminal, satellite mission ground station operations, Intel Center, Cascade ground sensor. Okay, that's new names that they have. Vertically integrated high performance RF and optical payload technology unlocks high value opportunities for national security and commercial customers. Key to Golden Dome, space superiority, ISR, and other future proliferated mission architectures. Owning the payload chain enables discriminating performance plus on-time. Does it say discriminating? Owning the payload chain enables discriminating performance plus on-time affordable delivery for high-volume constellations. GEOS acquired August 2025. Key to SDA T3TRK win, now delivering the most advanced fire control solutions of any vendor in the proliferated PWSA for Golden Dome. Optical Support Inc. acquired February 2026. Critical supplier to defense primes with unique technical solutions and in-house optical assembly, integration, and testing. Enhances optical and mechanical design capabilities to support scaling. Selected by Mission Defense Agency for SHIELD. IDIQ contract from MD awarded in Q4 2025 for the Scalable Homeland Innovative Enterprise Layered Defense SHIELD program. 151 billion shared contract ceiling. Did I read that right? 151 billion shared that's a big number.
That's why I said oh shit.
Yeah. Positions Rocket Lab to compete for future launch and space systems contracts to deliver capabilities to the warfighter with increased agility. Building the future of space and defense. Secretary of War Pete Hegseth toured Rocket Lab Engine Development Complex in Long Beach, California for the Arsenal of Freedom tour, highlighted the critical support Rocket Lab provides to the warfighter today and our growing role in enabling future capabilities. Neutron, here we go, baby. I've been dying to see this. Stage 1 tank update. Q1, stage tank ruptured during hydrostatic pressure trial in January 2026 after reaching anticipated flight loads. While not an uncommon outcome for any vehicle in qualification phase, we had expected this tank to pass and failure was not expected. A thorough investigation was initiated to determine root cause. The investigation identified that manufacturing defect resulted in a reduction in strength, specifically at a critical joint in the tank. The first tank was manufactured by a third-party contractor using a manual hand lay process. This was a scheduling decision designed to ensure tank production could continue while the AFP machine was being commissioned to manufacture future tanks. That answers a lot of questions. The next tank is in production now using the AFP machine, completely replacing the manufacturing process that introduced the defect. To ensure further resiliency, we're making a design change to the affected area to introduce margin and improve manufacturability. Once completed, the new tank will undergo extensive test campaign to ensure flight readiness. The design change, production time for the new tank, and the expanded test program ultimately pushes out Neutron's development timeline. Neutron's first launch now is targeted for Q4 2026.
Oh,
Do you guys know the the Eric Berger rule?
No, what's that?
The Berger law. He said any launch aimed for Q4 of a year happens on like Q2 or Q3 the next year.
Uh-oh.
I think it's called the Berger law or something like this. Hungry Hippo qualified and at Launch Complex 3. Neutron's fairing successfully qualified in Q4, delivered to Assembly and Integration Complex in Virginia Q1 2026. Up next, avionics and fluid systems integration, end-to-end systems testing, canards and TPS installation, ahead of integration with the rest of the launch vehicle. Next, Hungry Hippo in production for a second Neutron vehicle. Okay, Neutron thrust structure qualified, successfully qualified and ready to receive full set of Archimedes flight engines. One of the most complex parts of Neutron must be able to withstand 2.1 million pounds of thrust during tests, more than 44 electrons combined. Next up, fluids and avionics integration to the thrust structure before shipping to LC3. So plumbing. Cool. Interstage qualification underway. Neutron's 30-meter interstage is undergoing qualification testing at the Space Structure Complex before shipping to LC3, where it will be integrated with the Hungry Hippo fairing and remaining Neutron vehicle structures. Launch Complex 3 preparing for Stage 2 testing. Stage 2 test tower mounted on the launch mount at LC3, ready for arrival of Stage 2 and upcoming integrated stage tests on the pad. Ongoing pad activation and operation rehearsals continue in preparation for a very busy period at LC3 as various Neutron modules arrive for testing on the pad. Archimedes engine testing intensifies. Archimedes engines being put through extreme test conditions to verify performance and reliability in edge cases. Twin test cells at Stennis running in parallel to prepare first full set of engines for flight. Significant progress toward launch. Major structures reaching and passing qualification phase. Flight hardware is entering final integration for the first time. So the only orange, yeah, it's this new tank in production. And the rest of the parts seem ready. Also launch infrastructure. Okay. Financial highlights and outlook. Review of revenue and gross margins. So 38% year-over-year annual growth, plus 780 basis point year-over-year GAAP gross margin expansion, 16% quarter-over-quarter quarterly revenue growth, 100 basis point quarter-over-quarter GAAP gross margin expansion. Very nice numbers. Annual revenue increased 38%, or 166 million year on year, driven by an increase in launches from 16 to 21, as well as growth in our space systems business, driven primarily by increased contributions from our SDA Transport Layer Tranche 2 contract and our components businesses. Q4 revenue increase of 16% quarter over quarter, or 24.6 million, driven primarily by an increase in launches from 4 to 7. Year-on-year gross margin increase was driven by an increase in Electron fixed cost absorption due to increased launch cadence and increased ASP, paired with favorable product mix within our space systems business. Quarter-on-quarter Q4 gross margin increase was driven by an increase in Electron fixed cost absorption due to increased launch cadence within the quarter, paired with increased contribution from our higher margin space systems components business. Oh, we have someone who came in. Oh, okay, someone who came back. Okay. Here we go. Review of revenue, gross margin, and spend trends. So gross margin expansion, beautiful. Revenue and growth and SG&A efficiency. So space systems revenue, launch revenue, GAAP. Okay, and non-GAAP SG&A percent. So what it's showing is that the sales and general administrative is becoming less and less percent of the revenue and is down to 19% non-GAAP and 27% GAAP. I don't know how that fares compared to other companies, but the trend is very good. Consistent annual expansion on both GAAP and non-GAAP gross margins reflects significant progress towards achieving our target model for the business. Significant revenue growth representing a 4-year compound annual growth rate of 76%, driven by increased launch cadence annually, paired with significant growth in space system segment as we continue to expand our component product suite and expand into larger satellite platform opportunities. We continue to drive the business towards aggressive revenue, gross margin, and SG&A spending targets, particularly in the context of heavy R&D investment cycle with the Neutron development program. These operational efficiencies position us for even more improvement to the business model in 2026 and sets us up towards a model of significant profitability following the Neutron development cycle. Oh, wow. Significant profitability. They're not just saying profitability, it's significant profitability. Review of backlog, 1.85 billion. Q3 2020 ending backlog was 1.1 billion. Backlog by segment. Okay, backlog by customer. Okay, so yeah, they have a huge space systems backlog. That's 74% of the backlog. And government is 65%. Of the backlog. Okay, Q4 backlog increase of 69% quarter-over-quarter, or 751 million, driven primarily by our new SDA Tranche 3 tracking layer contract toward partially offset by strong revenue growth from both segments. We expect approximately 37% of our ending Q4 backlog to be recognized within 12 months. Can somebody calculate how much that is? That's their guidance. Which includes preliminary Tranche 3 RevRec estimates. We expect the remaining 63% to be recognized beyond 12 months. Healthy pipeline, including multi-launch deals, large satellite platform contracts, and typical turns business will create additional 2026 revenue growth opportunities beyond our existing backlog. Oh, interesting. Review of operating expenses. GAAP and non-GAAP SG&A increased year-on-year, driven by higher staff costs across multiple functions, including the impact from Geost acquisition paired with increased IT and legal expenditures, in part related to compliance efforts to support ramping our U.S. government classified programs and an active M&A pipeline. A GAAP and non-GAAP R&D increased year-on-year almost entirely due to staff costs and prototyping related to the Neutron development program, particularly around Archimedes production and testing, fluid systems, mechanical systems, and composite structures. GAAP and non-GAAP SG&A decreased quarter-on-quarter, with GAAP declining primarily due to reduced legal costs related to M&A and capital market transactions, and non-GAAP reductions reflecting lower marketing expenditures and similar reductions to legal transactions and expenses during the quarter. GAAP and non-GAAP R&D expense increased quarter-on-quarter due to a step up in Neutron development spending, in particular propulsion, as we continue to ramp production and increase testing cadence of the Archimedes engine and composite structures. EPS, non-GAAP free cash flow, and adjusted EBITDA. 1.1 billion in cash and cash equivalents, marketable securities, and restricted cash enables continued investment in strategic growth opportunities. GAAP EPS loss increased primarily due to the absence of a non-recurring event in Q3 related to the partial release of the valuation allowance against our corporate deferred tax assets stemming from the Geost acquisitions purchase price accounting. If someone can translate that from Chinese, please do so. Purchase of property equipment and capitalized software increased 3.8 million sequentially to 49.7 million as we continue our Neutron infrastructure investments, including the pad at LC3 at Wallops, Virginia, our engine development complex in Long Beach, California, and the return on investment recovery barge. Negative GAAP operating cash flow increased 41 million sequentially, primarily due to the timing of employee equity transactions and related tax payments. Elevated cash consumption is expected to continue, driven by investments in Neutron development and the build out of subsequent Neutron tails, as well as infrastructure required to scale the business beyond the initial test flight. Adjusted EBITDA loss improved 8.9 million sequentially due to a strong increase in revenue quarter over quarter, paired with improved gross margin, partially offset by increased R&D expenses related to Neutron. Q1 2026 outlook. Q1 2026 revenue outlook. Expect revenue to range between 185 to 200 million. Expect year-on-year increases in both space systems and launch revenue. So far, so good. Q1 GAAP and non-GAAP gross margin. Expect GAAP gross margin to range between 34 to 36%, driven by weaker mix in several of our product lines. Expect non-GAAP gross margin of 39-41. Q1 GAAP and non-GAAP operating expense. Expect GAAP operating expense of 120 million to 126 million. Expect non-GAAP operating expense of 106 million to 112. Q1 2026 adjusted EBITDA. Expect interest income of net 8 million. Adjusted EBITDA loss of 21 to 27 million. Weighted average shares outstanding of 605 million. That's a lot of shares since I last remember looking at the shares. Okay, cool. Okay, now I'm going to breathe. I let you guys do the talking.
Maddie, what did you like? What was your biggest takeaway here?
I think the advancements and everything else. I mean, yes, of course, there's disappointment with respect to the fact that Neutron gets delayed, but it's nice to see that, you know, positively or negatively, you could look at it many ways, but that the reason for the potential delay was due to a third party. I mean, you could always say, well, why didn't we just create our own? You know, I'm very optimistic that the AFP printing machine will be able to eliminate a lot of the issues and also make it a stronger tank so that we can progress towards the pad. Fingers crossed. I mean, the slide right after that, or maybe it was right before that, showed how much is already qualified. So it's really just reliant upon that stage 1 tank and really getting that up and going. And I think that there's the actual like they stated, the thrust structure is qualification is complete, so everything's green except for that stage 1 tank. And so to me, that's optimistic, and so it'll be cool to see from here on out the integration of some of these things actually occurring, and very curious on when we actually get that stage 1 tank actually out and tested. So fingers crossed it's within the next month or so. Gross margins continue to look really good. Revenue obviously growing at a very fast pace. Nice to see some contracts come through, 60+% quarter over quarter backlog growth. That's something I've been keeping an eye on. You know, I was really fearful that it would dip below that 1 billion mark. So it's nice to see that, you know, we're getting closer to that 2 billion mark, which is great. I'd love to see it cross over to the 3 billion plus, just to give us a little bit more runway. Keeping in mind, you know, if you're keeping your revenue flat, you know, it wouldn't be as big of a concern, but you're trying to grow revenue and grow backlog at the same time. It adds another piece of complexity to the equation. Like to see 30 deals of Electron. That was cool in 2025. So curious what's going on with that. And then nice to see also that even in a quarter where we're continuing to grow and continue to do a lot of testing, that EBITDA is not horrible. Yes, there's a lot of free cash flow, you know, going out the door, but that's to be expected right now. And once we actually get to harvest mode on Neutron, we should be good to go, and we should be able to start getting some positive EBITDA within the next 6 to 12 months. That's what I'm kind of forecasting. So fingers crossed. Curious to see where in full year 2026 revenue will get to. You know, will we get closer to 900 million or get close to that 1 billion mark? I think that'll be pretty fun.
Mm-hmm. Absolutely.
There's a lot of other things that I skipped over, but that was just kind of off the head.
Mm-hmm. It's good to see of those 30 Electron launches. It's good to see that Rocket Lab and Black Sky are continuing their partnership into the future. I've been following Black Sky for quite a while now, and I was commenting like they need a launch provider because they're kind of due with. I think they have one left with Rocket Lab from the last batch, So I kind of assume that they'll just be going with SpaceX because you see that from time to time. But it's good to see that they got the next 4 signed with Black Sky. So that'll like kind of pad out Black Sky's Gen 3 constellation. I think that fully builds it, but then past that, of course, they'll need to maintain. And they're already talking about Gen 4. I'm drawing a blank on the name. I think it's like Argos or Arpos or something. But either way, it's cool to see that relationship persisting. Interesting to see the silicone solar arrays among all sorts of Solero news. Also surprising, especially as we led into the call or the earnings presentation, we were talking about Optical Support Inc. And that came as a surprise because you kind of figured maybe they'd close Minaric and then work on the next acquisition. But it turns out that there are actually 2 acquisitions made this year already. The other being Precision Components from New Zealand. Just going down that list. So I don't mean to be a wet towel here for anybody, but that Shields thing, I just finished going through this with Redwire, so it's kind of fresh on the brain. That $151 billion IDIQ, it sounds really cool, but this is actually going to be split between 2,440 companies. And of course, this isn't going to be like it's not going to be evenly distributed. Maybe it'll kind of lean more towards like, more tested companies getting a bigger slice of the pie. But if you were to just really like zoom out and assume everybody gets an equal piece, that's 151 billion divided by 2,440 companies. So we'll call it 61.8. We'll call it $2 million per company, but that's over a 10-year period. So if you really kind of boil it down, it's like $6.2 million per year per bidder, I guess, however you want to phrase that. So it's like it's cool, but it's hopefully Rocket Lab just gets a bigger piece of the pie than that 6.2 million per year. Also, Vince, you mentioned the whole backlog. So 1.85 billion, 37% expected in the next. Actually, can I share my screen real quick?
Yeah.
So there's that 37%. Oh, I have too many screens.
I did the math. It's 680 million. It's only like a 12% growth, but they do mention below that they think there's opportunities this year that is not on the backlog yet.
Mm-hmm. I have something to show though, because I don't think that's I don't think that's quite accurate. And the reason that I say that, so every time that Rocket Lab has said, this is how much this is how much backlog there is at the end of this period, and this is what we're expecting over the next 12 months. That's basically what we're looking at here. I'll try bringing it in just a little bit more, or for some reason I can't. Either way, what we're looking at here, this is the number that is like guided for indirectly. So you can see remaining backlog totaled 534 million as of June 30th, 2023, 57% expected to be recognized in the 12-month period. So that's what we have up top here. And then the next row down, this is what was actually recognized. And then the third one is what is the percentage difference between those two. So these are each in like chunks of 3. So this is kind of the indirect guide. The second row is what's actually recognized, and the third one is the percentage change difference. So all this to say is we're looking at like 7%, 9%, as high as 24% here, 10%, 7%, 8%, and we can go as far as the end of what was just reported, Q4 2025, and that was a 13% beat on that. So it does look only like a, what did you say, Vince? A 12% difference?
Yeah.
But they could probably also
like currently, if we interpret that as their guide, then they're only guiding for 12% growth.
Mm-hmm. Yeah, I'm with you on that. I think that's going to be just a little bit higher is all I'm trying to drive to. That's what I'm trying to show here.
Yeah.
Cool.
Cool. So I see a lot of people asking when is the conference call and what happened to Sir Peter Beck speaking. So we're not speaking for him. The conference call is starting in 12 minutes. And we're just going through. Does anybody have a summary? Yeah, it was great earnings. I mean, I don't really see anything that I don't like in these earnings except for the Neutron delay. yeah, but other than that, like everything is going in the right direction, and yeah, I mean, I wish that the guidance was a little higher, but I don't think it's enough. Yeah, I don't know if, I mean, this is not an official guidance, and they did say that there is other opportunities this year that is coming. Matt, you're muted.
Thank you. Yeah, I think people need to take some of these numbers with like some patience, right? I mean, if you look at where we're at, I mean, year over year growth was 35, 36%. It was the best quarter for launch ever for the company at $75.9 million for just one quarter, closing in on 199 million for the entire year, which is the best for the company. Over 400 million in space systems, which is huge. That particularly for launch was 79% growth year over year. So last year, fourth quarter, we had $42.4 million worth of launch, and we got 75.9. So massive increase, 79%. And really, that's what drove up the growth for revenue in the quarter, because 15% was year over year for space systems, which was 90 million last year, and it's 103 million this quarter. But that being stated, I mean, we're talking about growing beyond this as well, right? And we know for the first quarter, we haven't yet had too many launches. I mean, we've had 2 so far. We're about to have a third. So if we're still predicting that we're going to be having close to $200 million in revenue for the first quarter, and granted there's only a month left, then that means that space systems bottom line revenue has to or top line revenue has to come up substantially. So I wouldn't be surprised if we end up with a quarter of over 120 million, which would be a massive quarter over quarter increase on space systems. And so people being disappointed by revenue maybe not only going up like 11, 12%. I mean, that's pretty impressive on a quarter over quarter basis. You annualize that, you know, we're still potentially in the realm of being able to increase revenue north of 30% in 2026. And I wouldn't be surprised if by the end of the year we end up with a 900 million sort of revenue generation. I think it might be too tough to get to close to $1 billion. That's obviously a massive year over year revenue growth. Going from 600 million to $1 billion. I mean, that's 80% growth, but I wouldn't be surprised if 850 million for the year is on the table. And I'm fairly confident that 800 million is in the bag. So that alone is a 33% revenue increase for the year, and would drive us easily into profitability based off of what I'm kind of seeing as gap margins are increasing, and hopefully we ramp down on some of the auxiliary spending.
Mm-hmm. I wonder what this Neutron push into Q4 means as well, as far as like that whole Neutron spend, because I'm trying to remember the exact figures. I think it was like December. Actually, I might even be able to bring it up. But I remember Adam mentioning Goldman that I think it was around the $400 million mark that we could. Oh, actually, I think I got it right here. Yeah, so $360 million for Neutron spend across CapEx and R&D exiting 2025. And at that time, they were expecting a first half 2026 launch with $40 to $50 million being split across the 2 quarters. So we're looking at kind of like a net spend pool of around $400 million across the 5-year development period. So I wonder, like, well, I'll ask you guys, like, do you think that we're going to see an additional $40 to $50 million? Or do you think that's going to kind of taper off? Or like, how are you viewing that?
I think Adam Spice said in the last earnings call that each quarter is 30 something million in employee costs for Neutron. So each delay is, he said something like this, no?
I think so. Yeah.
But what I wanted to say is I think that they are sandbagging with the Neutron launch, and like I was actually thinking through the other day, and you know that they mentioned so many times that they're setting up like not just the first launch, but also like the whole production line of Neutron. And I realized that, okay, but that also means that, yes, like the first tank maybe had to be built by a third-party company. But, you know, like the minute you move things in-house, like even if they break, you just like make them, you know, like there's very little waiting to like correct what you need to correct and manufacture the next one. And I don't believe that the tank is going to take until Q4 to manufacture. Like I think that they wanted to sandbag on this because there's so many parts complete now, and then I think they felt that they were getting maybe a bit too much attention by very enthusiastic retail people, you know, and it's better to like push the date out and then be positively surprised.
Mm-hmm.
Yeah, I think one of the things that I'm thinking about as well is that regulatory is a piece that might be taken into account as well. I mean, you don't know. I mean, maybe they anticipated they'd be able to get a launch license way faster, and maybe they need a fully integrated test before they're able to do that. So, you know, I'm not 100% certain on that piece of it, but I've yet to really see any official documentation come through to say, hey, you guys have a license. I've only seen applications. And so they might have just said, just based off that uncertainty, you know, let's move it from 3Q to 4Q. I mean, just based off what I'm seeing, I mean, I'm no rocket engineer, but, you know, just based off what I'm seeing in terms of progress, it looks very healthy. And I would still be surprised to not see something on the pad by the end of the second quarter, you know, within the next 2 to 3 months. So, yeah, I mean, cautiously optimistic. It seemed like that it shouldn't take 100% too long to rebuild that stage 1 tank. It was already underway before they exploded the first one. So fingers crossed that that particular piece of qualification can occur very quickly, and hopefully within the next month or two, and then that'll gain more clarity as to what the holdups will be. Because I think after that, it's really return on investment, which isn't even a part of launch 1. Then I think it would just strictly be the regulatory piece. So I don't know. Maybe I'd have to check what other things are potentially hanging in the wind, but everything else seems to be pretty much there.
Yeah, that's what I mean, that there's no reason that it should take to Q4 other than sandbagging. Because, you know, like if you're a startup that is out of money and you have to order every piece of your design rocket from somewhere else, and then you're going to set up supply chains later, you know, I guess that's how a new rocket company would do it. Then any of these delays, like when a tank blows up, or, you know, it's like a major delay for you because you have to reorder parts. But these guys are supposed to have set up production lines, and I'm very, very happy when things blow up, like not mid-flight and on ground, and you can, you know, like correct all these issues before. And I think that, you know, when you're setting up a production line, like you can, yeah, only have a certain amount of delays. And, you know, and the qualifications testing is also like, how do you call it? Like, I guess when you know the limits of a piece, like the production unit number 2, you don't put them through the same test because you already know certain things.
Yeah, it says, sorry, go ahead.
No, I just mean that I think that it should speed up from here. And there's so many parts ready now and so many production lines installed that I think they're sandbagging.
Yeah, and also looking here just on the site based off of the readiness. So engine qualification is still yellow. So even though they're increasing the test cadence, doesn't mean it's 100% ready and qualified. Regulatory approval for launch, the stage 1 qualification, the vehicle integration, that is a piece of it as well. The stage 2 hot fire, which I think, or static fire, sorry, which I think likely requires Archimedes to be completed prior to progressing to that, but maybe I'm wrong. And then stage 1, of course, you need to have all of stage 1 static fired. So depending on where you need to get to before you actually get your regulatory approval, that might be what what the holdup is, and who knows how long regulatory approval is. Now, with the good relationship that we have with Virginia, and hopefully with Jared Isaacman, hopefully all that sort of stuff. Of course, you need FAA, not necessarily just the NASA approval, but for all these sorts of things, who knows what the critical path is really. I'm curious if they're going to talk about that on the call today, specifically what is critical path to make sure everything, because if it's just the integration piece, then you're just waiting on stage one, or if it's the engine, that would potentially be holding up all the other things. So I'm curious what's the critical path, what's the largest timeline item.
Mm-hmm.
By the way, the earnings call can start any minute now. I have it here on. Maybe we can just double check. Do you guys hear any sound? It's supposed
I hear
to
music.
Okay,
Yeah.
good. And I go away from this. Okay.
Do you hear it or
Yeah.
not?
Yeah, I hear it constantly, but then
Okay.
you guys, you shouldn't hear it now.
Yeah, no, we don't hear it. Well, I hear it on. Hold on, let me just double check. Yeah, no, I don't hear it, so that's good.
Did we go through all the press releases, by the way?
I think so. I think the other ones are kind of touched on. Actually, there was, complete spacecraft commissioning for the Escapade mission. There was the solar arrays for data centers, and then there was the mention of the one acquisition. Maybe there was a press release for the other, but I only saw one for the one.
The call is starting.
Oh, perfect.
Do you guys hear?
Yep.
I don't.
You got to share your screen, Vince.
No. 1 second.
At that time.
All right, there we go.
This conference is being recorded. It is now my pleasure to introduce your host, Morgan Content, Vice President, Marketing and Communications at Rocket Lab. Thank you. You may begin.
Thank you. Hello and welcome to today's conference call to discuss Rocket Lab's fourth quarter and full year 2025 financial results, business highlights, and other updates. Before we begin the call, I'd like to remind you that our remarks may contain forward-looking statements that relate to the future performance of the company, and these statements are intended to qualify for the safe harbor protection from liability established by the Private Securities Litigation Reform Act. Any such statements are not guarantees of future performance, and factors that could influence our results are highlighted in today's press release, and others are contained in our filings with the Securities and Exchange Commission. Such statements are based upon information available to the company as of the date hereof and are subject to change for future developments. Except as required by law, the company does not undertake any obligation to update these statements. Our remarks and press release today also contain non-GAAP financial measures within the meaning of Regulation G enacted by the SEC. Included in such release and our supplemental materials are reconciliations of these historical non-GAAP financial measures to the comparable financial measures calculated in accordance with GAAP. This call is also being webcast with a supporting presentation, and a replay and copy of the presentation will be available on our website. Our speakers today are Rocket Lab founder and chief executive, Sir Peter Beck, as well as chief financial officer, Adam Spice. They will be discussing key business highlights, including updates on our launch and space systems programs. We will discuss financial highlights and outlook before we finish by taking questions. So with that, let me turn the call over to Sir Peter.
Thanks very much, Morgan. So I'm going to start today by stealing some of Adam's thunder and sharing some of their financial highlights up front. We had a new annual revenue record in 2025 coming in at $602 million, which represents 38% growth year on year compared with 2024. We also had a record quarter in Q4 with revenue coming up at $180 million, which was up 36% from Q4 last year. At the end of Q4, our backlog sat at a record $1.85 billion, which is up 73% from the same time in 2024. And finally, we also achieved record gross margins in Q4 at 38% GAAP and 44% non-GAAP. As we tend to say on launch day, that's greens all across the board and a great result. It comes down to one thing, and it's simply relentless execution from the Rocket Lab team across our launch and space systems programs. Here are some highlights from that execution. I won't labour on these now, as we'll go into more detail in the up and coming slides. But ultimately, we launched and signed a record number of Electron missions and led the way on hypersonics testing with HASTE and achieved some significant qualification and development milestones on Neutron. On the space systems front, we were awarded the largest contract in Rocket Lab's history, successfully delivered the Escapade mission to Mars for NASA, and we had record growth across all of our space systems component businesses. On acquisitions, we welcomed GEOST in 2025, which officially marked our entrance into payloads, and followed this up in Q1 2026 with the acquisition of Optical Support Inc., which further strengthens our optical systems offering. We also expanded our machining and manufacturing footprint with the acquisition of Precision Components Limited, which actually just closed today, and will ultimately support continued scaling of the components manufacturer for both launch and space systems. More on these in the slides ahead. So onto some quick highlights for Electron and HASTE. Rocket Lab remains the small launch leader globally as the only rocket delivering reliable and high cadence launch opportunities for small sat. We launched 21 missions across Electron and HASTE in 2025, which was a new company record. We also launched 7 missions in Q4, our highest number of launches in a single quarter to date. Meanwhile, there were no successful orbital launches of a new US or European small launch vehicle in 2025 at all. And it's very clear when small set operators need a dedicated ride to orbit, they come to Rocket Lab, and we're proud to hold this title and look forward to expanding it again, the record again, even further this year. The US government has made no secret of the fact that faster and more frequent hypersonic testing is an urgent need and a national priority. Rocket Lab is the only credible provider that has demonstrated the ability to deliver this capability right now, not years into the future. In 2025, we conducted 3 successful HASTE missions, and the next one is on the pad in Virginia, now just days away from launch. This kind of cadence and reliability positions us well for programs like Golden Dome. With more HASTE missions on the books this year, we'll be rapidly building that moat even further. It was a record year for launching missions, but also for signing them. We added more than 30 new launches to the manifest across Electron and HASTE. They came from a nicely diversified customer base spanning the US, NatSec and defense, commercial constellations, and international organizations. We had many returning customers sign new contracts, often for bulk buys of multiple launches, but also added new names too, which demonstrates that our small launch customer base continues to expand. In Q4 alone, we signed a new multi-launch deal with Black Sky for 4 new launches, which brings the total number of missions they've booked with us to 17. We also signed a contract with a new confidential customer in support of national security. As always, our pipeline for Electron and HASTE remains strong, and we're excited to continue signing new and novel missions, as well as a standard repeat and mission profiles in 2026. Now, on to space systems. Rocket Lab is not new to being a prime contractor, but in Q4, we made an announcement that highlights our substantial growth in satellite in our satellite market and further cements our position as a preferred disruptive prime. The Space Development Agency, or SDA, awarded us an $816 million contract to build an advanced constellation of 18 spacecraft equipped with advanced missile warning, tracking, and defense sensors to provide global and persistent detection and tracking of emerging missile threats. It's the largest single contract in Rocket Lab's history. What's more, as a leading merchant supplier into the other tranche 3 prime contractors, there are additional subsystem opportunities that could add a total capture value to approximately $1 billion for supplying payloads, solar power, reaction wheels, and star trackers, software, and other solutions from our broad portfolio of capabilities. It's important to point out that the acquisition of GEOST played a significant role in securing this award. Rocket Lab is the only commercial provider producing both the spacecraft and payloads in-house for SDA and for the tracking layer Tranche 3, supporting the government's goals for speed, resilience, and affordability in space-based missile defense. This award follows on from our previous prime contract award for SDA's Transport Layer Beta Tranche 2 program. With the 2 programs combined, we now have more than $1.3 billion in contracts signed with SDA. I think an important takeaway from this announcement is not just that we've won a significant contract, it's that Rocket Lab is repeatedly winning large awards that have historically been the exclusive to the legacy aerospace primes. We're seeing a new world order established in the defense world with the rise of companies like Anduril and Palantir playing leading roles in disrupting slow, bloated traditional players. Rocket Lab is clearly doing this in space and unseating the old guard. Okay, on to Mars. In Q4, the ESCAPADE mission launched, and the twin satellites we built for NASA and UC Berkeley are now well on their way to the Red Planet. With ESCAPADE, we've proved that it's possible to deliver decadal class missions on a drastically shortened timelines and for significantly smaller budgets than typical interplanetary missions. We made this possible through vertical integration, maintaining strict control over schedule and budget. With both spacecraft now successfully commissioned and in a loiter trajectory near L2, that's a Lagrange point, around 1.5 million kilometers from Earth, Rocket Lab's primary role in the mission will soon be complete when we hand it over to the team at UC Berkeley next month. Even once control has been transferred, we'll be cheering blue and gold along as they arrive in Mars orbit in September next year. Our role in ESCAPADE might have reached mission success, but we're not quite finished yet with Mars yet. We've made no secret of the fact that we think Rocket Lab is the strongest contender to deliver NASA's Mars Telecommunication Orbiter program. An MTO will be fundamental to everything else on Mars, enabling science now and human exploration in the future. We'll make it possible with a rare combination of proven spacecraft, deep space mission experience, reliable rockets, and end-to-end space systems capability as a vertically integrated mission provider. Our hardware and our software has enabled some of the most ambitious and successful Mars missions in history, including the Mars InSight lander, Perseverance rover, Ingenuity helicopter. Mars is in our DNA, and Rocket Lab has more hardware and on and orbiting Mars than just about any other company today. Okay, on to programs. We had a key milestone for LOXSAT, which is our Launch Plus spacecraft mission to build and deploy an on-orbit cryogenic fuel depot for NASA. This spacecraft is now complete and will be marching steadily towards launch later this year. Okay, we also have an exciting development to share from our space solar business. It requires some background on kind of the state-of-the-art of space solar power, so bear with me a little bit on this one. The satellite industry is rapidly expanding and projected to grow 7 times by 2035. Those satellites will all need solar power. Rocket Lab is the world leader in solar space power, so it should come as no surprise that we're the best positioned to serve this growing market. In addition, ambitious opportunities are on the horizon from space-based data centers. As AI and compute demand soar and data centers on Earth reach their limits, companies are beginning to seriously explore moving data centers to orbit where they can take advantage of the cool conditions and infinite solar energy. But rapid market growth of this size, both for typical constellations and futuristic projects like space-based data centers, will be hampered if traditional solar cells are the only option. So it's against this backdrop that I'm proud to announce that Rocket Lab is introducing a space-optimized silicon solar arrays. While silicon is not new in space, it's always suffered from low radiation tolerance and very low life expectancy with poor performance. Our team are the experts in space solar, having developed some of the most complex cells for flagship missions to the Sun and most of the missions on Mars today. The team has produced a silicon array that is a game changer. By harnessing silicon, we're able to deliver a really low cost per watt at industrial scale, enabling gigawatt class power generation in space at kilometer size scale using mass manufacturable lightweight and modular systems. We've also taken the additional step of developing a hybrid solar array solution that incorporates both high efficiency cells and silicon cells, an approach that leverages the benefits of both technology. When size, weight, and power or performance are at a premium, traditional high efficiency cells are enabling. When cost, schedule, or constellation scale are required, silicon cells can meet that demand. When these factors must be traded off and balanced, hybrid arrays enable a combination of the two to deliver an optimum performance at a compelling value. So for new products, we move into new acquisitions. On the top of acquisitions, no doubt everybody is interested in an update on Mynaric. The German government is still working methodically through the regulatory review process, so there's not much to add at this stage while that sort of runs its course as expected. But we look forward to providing an update once that's concluded. There are a few stories floating around in the media with different theories on how the transaction is progressing. All as I'd say there is don't believe everything you read in the media and online. Otherwise, this month we have welcomed Optical Support Inc. to the Rocket Lab team. OSI is a Tucson-based leader in the design and manufacture of custom high-precision optical and electro-optical mechanical instruments. OSI's technology is a key enabler for national security and commercial satellites. They're a key subsystem in Rocket Lab's payloads for space protection, space domain awareness, missile warning, and track and defense. The vertical integration opportunities here are clear, while we look forward to scaling production and capabilities to serve our customers and our own programs, as we've done with many of our other successful acquisitions. And last but not least, we've also acquired Precision Components Limited in New Zealand, again, a known and trusted supplier to us that's now part of the family. With this acquisition, we've established a new precision machining complex that enables a huge increase in machining capacity. So I think it's worth spending just a quick moment here on the strategic importance of our recent optical-focused acquisitions. Vertically integrated high-performance RF and optical payload technologies unlock high-value opportunities for national security and commercial customers. They are key to unlocking programs like Golden Dome and other proliferated mission architectures. Owning the payload chain enables discriminating performance plus greater control over schedule, cost, and especially for high-volume constellations. We've already seen this strategy in action with SDA Tranche 3 award, and we expect to deliver more value and opportunities to us this year and beyond. We received another strong vote of confidence in our ability to deliver on critical national security and defence programs when we were recently selected by the MDA for SHIELD. In short, we're now onboarded to the program, which has a contract values up to $151 billion, giving us the opportunity to compete for future launch and space systems contracts that deliver these capabilities to the warfighter with increased agility. All of the above ultimately points to one thing. Rocket Lab is a disruptive leader in building the future for space and defence. This was driven home by a recent visit to our facilities in Long Beach by the Secretary of War, Pete Hesketh, during the Arsenal of Freedom tour. The visit highlighted the critical support we already deliver to the warfighter today and showcased our capability to meet ever-evolving needs in the future. And last but not least, before Adam digs into the financials, here's the latest on Neutron. We've got lots of progress to share across Neutron, but I'll start with a topic on everyone's mind, I'm sure, which is the Stage 1 tank update. In January, we shared that Neutron's Stage 1 tank had ruptured during a hydrostatic pressure test at Space Systems Complex in Little River. Now, failures aren't uncommon during the qualification phase of any rocket development program, but I do want to point out that this was unexpected, and ultimately we had anticipated that this tank would pass qualification. Now, the tank did meet its anticipated flight loads, but as we prepared to open up the test bounds and push the pressures and loads beyond this to understand the margins in the structure, the tank let go earlier than we expected. The post-test review process identified that a manufacturing defect introduced a reduction in the strength at a critical joint in the structure, specifically around the tank closeout, which is an autoclave-produced part that interfaces with the bulk composite laminate of the tank and the dome. The review of the hardware and test data suggested that the tank otherwise performed as expected. The first tank was hand-laid by a third-party contractor while we're getting the automated fiber placement machine up and running. And it's in this hand-lay process that a defect was introduced. Now, the decision to work with a third-party contractor was ultimately driven by schedule, as it would allow us to produce the first tank rapidly while simultaneously commissioning the AFP machine for future tank production. And it's not uncommon for us to run parallel development paths like this to accelerate schedules, as it can be a cost-effective way to iterate prototypes and first articles while also standing up long-term production capability to enable fast scaling down the track. Now, the next tank is already in production. This time it's being built on the AFP machine, completely eliminating the possibility of this hand defect reoccurring. It's worth pointing out that Neutron's second stage was largely produced was entirely internally passed and qualification. It's worth pointing out that Neutron's second stage was produced entirely and internally and passed qualification comfortably. Beyond changing the manufacturing process, we also making some minor design changes to the first stage tank to introduce more margin and improve manufacturability. To be clear, we're happy with the overall tank design, but since we're making a new one, we thought we'd always take the opportunity to tweak things a little bit and optimize it. Once completed, the new tank will undergo an extensive test and qualification campaign to verify flight readiness, and we're going to take our time with that process. The priority will always be to bringing a reliable rocket to market, even if it means taking a few extra months. Ultimately, the combination of the new tank and the production design tweaks and the test and qualification campaign will adjust Neutron's time frame a little bit. As such, Neutron's first launch is now targeted for Q4 2026. Neutron is still scheduled to come to market in an incredibly aggressive time frame, and what's more, we'll be bringing a robust and thoroughly tested vehicle to the pad. We look forward to sharing more development progress as we run through the final development phases this year. Okay, so onto some milestones in the Neutron program over the past quarter. You would have seen over the next few slides why I'm dubbing this the quarter of qualification. We've taken massive strides in Q4 as well as Q1 so far, successfully qualifying critical flight hardware from large structures through to component level systems. In Q4, the Hungry Hippo fairing successfully passed qualification, and then on into Q1, it made its way to Wallops. It's an exciting time in Virginia as Neutron flight hardware starts arriving, and we can get into the final assembly and integration and test phase. For the Hungry Hippo specifically, that looks like fluid systems, an installation of canards and thermal protection systems, and then of course, end-to-end testing. While we work through that in preparation for the first flight, we have the second Hungry Hippo in production for the next Neutron launch vehicle as well. Another successful qualification on the board is Neutron thrust structure. This is a really complex part of Neutron. It must be able to withstand 2.1 million pounds of thrust, which is more than 44 electrons simultaneously lifting off, to give everybody kind of a sense there. The structure is now officially onto final integration, which is the final hurdle before we get into integrated system checkouts, cryogenic proof tests, vehicle hot fires, wet dress, and then of course launch. It'll go through avionics and fluids and subcomponent integration before shipping out to LC3. Meanwhile, at Middle River, Neutron's interstage is undergoing its own qualification campaign before being shipped to LC3. Neutron's second stage is hung inside this during flight. It then passes through the mouth of the Hungry Hippo and carried to orbit. Like the Hungry Hippo, the interstage remains attached to the first stage and reused, so it needs to undergo a robust testing and program so we can ensure that it can withstand the forces of launch and landing multiple times. And then stage 2 is in its final integration and getting ready for its debut on the test stand at LC3. This is a specially built rig on the top of the LC3 launch mount where we'll go and conduct a barrage of integrated tests before ultimately moving into hot fires on the stand. That will be L3's first taste of what an Archimedes engine, and a huge milestone for the development program. So we look forward to testing that soon. Which brings me to the last but not least, Archimedes. Right now, the engines are in boot camp. We have not been nice to them at all. It's all well and good to test engines to expected bounds. But through experience, I've learned that spaceflight has a way of throwing things at you that aren't expected. Rocket engines don't tend to fail when everything's boring, and when you can rely on analysis and simulation to bound, and then truly understand performance. Ultimately, engine reliability is gained via testing. There's just no substitute. So that's what we're doing, and we're really pushing them through the edge cases, backing right off the inlet pressure, inducing cavitation, and generally doing really nasty stuff to them. Ultimately, you want to know how the engines are going to perform in a really wide range of scenarios on the ground before you put them in the air and find out in flight. Too many rocket companies have not done this, and it typically doesn't end well. This is the same kind of process we undertook when developing Rutherford, the engine on Electron. And right now, we've flown more than 800 of those engines successfully to space. So we'll be bringing the same level of reliability and rigor to Archimedes. Beyond the stage 1 tank, we've had a really positive quarter for Neutron progress, and this gives you a snapshot of just how much progress we've seen and made on the path to first launch. Major structures and subsystems are passing qualification, and for the first time we have hardware and final integration. These are the final steps before we go into integrated testing on the pad with hot fires, stage tests, and then wet dress, and then of course launch. Beyond the vehicle itself, we've established all the supporting infrastructure to enable first launch and beyond. LC3 has obviously stood up, plus production and test facilities are all humming, while the regulatory work is all tracking along as we expect. The things to look out for the next few months, to know that we're marching steadily towards launch, include seeing more hardware making its way to the launch site. We will be conducting extensive testing of flight hardware, and then obviously that'll lead up to Neutron's first flight. So that wraps up the operational highlights. So I'll hand over to Adam for the financial overview and outlook.
Thanks, Pete. Fourth quarter 2025 revenue was a record $180 million, coming in at the high end of our prior guidance range and representing an impressive year-over-year growth of 36%. This strong performance was driven by significant contributions from both of our business segments. Sequentially, revenue increased by 16%, underscoring the continued momentum across the business. Our Space Systems segment delivered $103.8 million in revenue in the quarter, reflecting a sequential decrease of 9.1%. This decline was primarily stemmed from our satellite platforms business and our solar businesses, both of which continue to perform exceptionally well despite the time-to-time programmatic nonlinearity of revenue recognition under ASC 606 and related subcontractor progress. We're fortunate that the growing diversification across Space Systems and launch can often provide more predictable top-line growth despite underlying volatility at the individual product line level. This was one of those quarters where strength in launch services more than offset the declines in Space Systems, generating $75.9 million in revenue, representing an 85% quarter-over-quarter increase due to the increase from 4 to 7 launches during the period, including 1 HASTE mission. On a full-year basis, 2025 revenue was $602 million, an impressive 38% growth year-on-year. Now turning to gross margin. GAAP gross margin for the fourth quarter was 38%, at the center of our prior guidance range of 37 to 39%, and an increase of 100 basis points quarter-over-quarter. Non-GAAP gross margin for the fourth quarter was 44.3%, which was also in line with our prior guidance range of 43 to 45%, and an increase of 240 basis points quarter-over-quarter. The sequential improvement in gross margins was primarily driven by an increase in Electron fixed cost absorption due to the increased launch cadence within the quarter, paired with increased contribution from our higher margin Space Systems components businesses. On a full year basis, GAAP gross margin was 34.4%, an increase of 780 basis points year-over-year, while non-GAAP gross margin was 39.7%, an increase of 770 basis points year-over-year. Relatedly, we ended Q4 with production-related headcount of 1,244, up 46 from the prior quarter. Now, before moving on to backlog, I want to take a moment and zoom out and provide perspective on the progress we've made towards our long-term financial model since our NASDAQ listing in 2021. Revenue has grown nearly 10x, achieving a compound annual growth rate exceeding 76%. Gross margins have increased each year, more than doubling the contribution from each dollar of revenue. This expansion highlights our strong and disruptive competitive position in the industry, as well as our highly valued and differentiated products and services across the business. The combination of this revenue growth and margin expansion has put the company on a solid foundation and path towards achieving meaningful operating leverage and long-term cash flow generation. Lastly, I thought it important to call out our SG&A spending as a percentage of revenue, as I'm encouraged to see this continue to trend downward as we scale the business. We are constantly driving the business to be fiercely efficient, and I believe that we're positioned to drive even more growth and efficiency in 2026 and beyond. Now turning to backlog. We ended Q4 2025 with approximately $1.85 billion in total backlog, an impressive 69% growth sequentially, primarily due to our recent SDA Tranche 3 Tracking Layer contract award, which we announced last December. As we've mentioned before, Space Systems backlog in particular can be lumpy given the timing of these increasingly larger needle-moving program opportunities. But once awarded, they can significantly de-risk revenue growth for several years. We continue to cultivate a strong pipeline that includes multi-launch agreements across Electron, HASTE, and Neutron, as well as large satellite platform contracts across government and commercial programs. Currently, launch backlog accounts for approximately 26%, while space systems represents approximately 74%. Looking ahead, we expect approximately 37% of our current backlog to convert into revenue within the next 12 months, which includes preliminary Tranche 3 revenue recognition estimates, which we believe will prove to be conservative, which, in addition to the healthy sales pipeline, are expected to drive incremental top-line contribution beyond the current 12-month backlog conversion. Turning to operating expenses, GAAP operating expenses for the fourth quarter of 2025 were $119.3 million, below our guidance range of $122 to $128 million. Non-GAAP operating expenses for the fourth quarter were $104.5 million, which were also below our guidance range of $107 to $113 million. The sequential increase in both GAAP and non-GAAP operating expenses were primarily driven by continued growth in prototype and headcount-related spending to support our Neutron development program. Specifically, investments ramped up in propulsion as we continue to test Archimedes engines, as well as test and integration of mechanical and composite structures at our facility in Middle River, Maryland. In R&D specifically, GAAP expenses increased $8.1 million quarter over quarter, while non-GAAP expenses rose $7.7 million. These increases were driven by the ramp-up of Archimedes production and testing, along with higher expenditures related to composite structures and fluids, as just mentioned. Q4 ending R&D headcount was 1,012, representing a decrease of 7 from the prior quarter. In SG&A, GAAP expenses decreased $5.1 million quarter over quarter, while non-GAAP expenses declined $1.3 million quarter over quarter. These decreases were primarily due to a reduction in transaction-related legal and other professional services fees related to M&A and capital markets transactions, paired with a slight reduction in marketing expenses. Q4 ending SG&A headcount was 389, representing an increase of 4 from the prior quarter. In summary, total headcount at the end of the fourth quarter was 2,645, up 43 heads from the prior quarter. Turning to cash, purchase of property, equipment, and capitalized software licenses were $49.7 million in the fourth quarter of 2025, an increase of $3.8 million from the $45.9 million in the third quarter. This increase reflects ongoing investments in Neutron development as we continue testing and integrating across the pad at LC3 in Wallace, Virginia, and Middle River, Maryland, expanding capabilities at our engine development complex in Long Beach, California, and build-out of the return on investment recovery barge in Louisiana. As we progress towards Neutron's first flight, we expect capital expenditures to remain elevated as we invest in testing, production scaling, and infrastructure expansion. GAAP EPS for the fourth quarter was a loss of 9 cents per share, compared to a loss of 3 cents per share in the third quarter. The sequential increase to GAAP EPS loss is mostly attributable to the $41 million tax benefit we recorded during the third quarter, which was due to the partial release of the valuation allowance against our corporate deferred tax assets, as a result of acquiring an equal amount of deferred tax liabilities emanating from the GEOST acquisition purchase price accounting. GAAP operating cash flow was a use of $64.5 million in the fourth quarter of 2025, compared to $23.5 million in the third quarter. The sequential increased use of $41 million was almost entirely due to the timing of employee equity program-related tax payments. Similar to the capital expenditure dynamics mentioned earlier, cash consumption will remain elevated due to Neutron development, longer lead procurement for SDA, investments in subsequent Neutron tail production, and infrastructure expansion to scale the business beyond the initial test flight. Overall, non-GAAP free cash flow, defined as GAAP operating cash flow, less purchases of property, equipment, and capitalized software in the fourth quarter of 2025 was a use of $114.2 million, compared to a use of $69.4 million in the third quarter. The ending balance of cash, cash equivalents, restricted cash, and marketable securities was approximately $1.1 billion at the end of the fourth quarter. The sequential increase in liquidity was driven by proceeds from sales of our common stock under our at-the-market equity offering program, which generated $280.6 million during the quarter. These funds are primarily intended to support acquisitions, such as the announced pending Mynaric acquisition, the recently consummated acquisitions of Optical Support Inc. and Precision Components Limited, as well as other targets in our robust M&A pipeline, along with general corporate expenditures and working capital. We exited Q4 in a strong position to execute on both organic and inorganic growth initiatives and to further vertically integrate our supply chain, expand strategic capabilities, and grow our addressable market, consistent with what we've done successfully in the past. Adjusted EBITDA loss for the fourth quarter of 2025 was $17.4 million, which was below our guidance range of $23 million-$29 million loss. The sequential decrease of $8.9 million in adjusted EBITDA loss was driven by significant revenue and gross margin improvement, partially offset by increased operating expenses related to Neutron development. With that, let's turn to our guidance for the first quarter of 2026. We expect revenue in the first quarter to range between $185 million and $200 million, representing 7% quarter-on-quarter revenue growth at the midpoint, and growth of 57% from the year-ago quarter. We anticipate slight step down in both GAAP and non-GAAP gross margins in the first quarter, with GAAP gross margin to range between 34%-36%, and non-GAAP gross margin to range between 39%-41%, with a modest sequential decline driven by a greater mix of space systems versus higher margin launch, and a weaker margin mix within our space system segment. We expect first quarter GAAP operating expenses to range between $120 million and $126 million, and non-GAAP operating expenses to range between $106 million and $112 million. The quarter-over-quarter increases are primarily driven by ongoing Neutron development and spending related to Flight 1, including staff costs, prototyping, and materials. However, we expect to see a shift in spending from R&D and into Flight 2 inventory throughout 2026, which is an encouraging sign of progress as we move closer toward Neutron's first flight and adjusted EBITDA positivity as a result. I'm optimistic that with the impressive strides we've made towards this milestone, and currently expect Q1 to mark peak Neutron R&D spending. We expect first quarter GAAP and non-GAAP net interest income to be $8 million, which is a function of higher cash balances, as well as conversion of approximately $117 million of convertible notes since December 31st. We expect first quarter adjusted EBITDA loss to range between $21 million and $27 million, and basic weighted average common shares outstanding to be approximately 605 million shares, which includes convertible preferred shares of approximately 46 million, and reflects the conversion of approximately 23 million shares from our outstanding convertible notes thus far in Q1. There remains only 7.5 million shares, or 11% of the original $355 million issuance outstanding. And when taken into the additional context of the retirement of the Trinity equipment line in Q4, we have substantially eliminated indebtedness from the business. Lastly, consistent with prior quarters, we expect negative non-GAAP free cash flow in the first quarter to remain at elevated levels, driven by ongoing investments in Neutron development and scaling production. This excludes any potential offsetting effects from financing activities. Last but not least, here are some of the upcoming investor events that we'll be attending in the next few months. And with that, we'll hand the call over to the operator for questions.
Thank you. If you'd like to ask a question, please press star 11. If your question has been answered and you'd like to remove yourself from the queue, please press star 11 again. Our first question comes from Andres Sheppard with Cantor Fitzgerald. Your line is open.
Hey, everyone. Good afternoon. Thanks so much for taking our questions, and congrats on all the great progress, and thanks for the update on Neutron. Adam, maybe want to start with the backlog. I'm wondering if you can maybe help us drill a bit deeper in it and maybe remind us what is included in here. Does this include the 40% of revenue from SDA Tranche 2, 10% of maybe the Tranche 3, and what are you including from Neutron and Electron here? Thank you. Hello?
I'm sorry, the mic went off. I don't know how much you caught of that. So all of the SDA contracts were added to backlog. So what remains for SDA Tranche 2 transport layer is still in the backlog. Obviously, what's been recognized as revenue is no longer there. Through the end of Q4, we hadn't recognized any of the Tranche 3 contract awards, so all of that value is currently in backlog, and that will start to convert into revenue and come out of backlog, obviously, in that process. As far as Neutron's concerned, I think we've spoken before that we have several flights that are representative in our launch backlog that's reflected in our filings. So hopefully that answers your question on backlog composition.
Yeah, that's helpful. Thank you. And maybe just as a follow-up, so, on Neutron, with the shift to Q4 now with the first launch, how should we think about cadence? Will you still target maybe 3 launches within the first 12 months after the first one? How confident are we in the development of the second tank? And wondering if maybe we should expect any step up in CapEx now with the second tank in production. Thank you.
Adam, I can answer a couple of those, and maybe you and some of it as well, Andres. So with respect to the tank, I think it's well understood what needs to be done there, and we had built a lot of the second stage tank on the AFP machine, so that really solves that problem. And the way to think about just sort of follow-on flights is it's not quite as dire as like moving all of the follow-on flights 12 months or to the first flight, because as you've seen in the presentation, we're already building flat out additional Neutron tail numbers, so it'll probably be a slightly faster convergence into subsequent flights, because none of the other hardware that's qualified is being halted. Obviously, it's just that tank, and the AFP machine enables us to build a tank just way more rapidly than with a hand lay process. So I think we'll be in better shape there.
Yeah, and Andre, I guess with regards to your question, as far as CapEx and so forth related to the second tank that's replacing the first one that ruptured. I mean, the benefit now, as Pete said, of being on the AFP is not only can we produce it faster, but the actual cost to produce that second tank is quite low. The first tank was very expensive because, as Pete mentioned earlier, it was a hand laid up tank. It took a long time. This one will be much quicker. And also, since we've now commissioned the AFP, we're really just talking about variable costs related to the tank materials more than anything else, because the existing labor is already kind of in the model. So there won't be any increased CapEx. And, the impact to R&D as a result of the tank failure is actually not, that tank itself is actually not that significant.
Got it. That's super helpful. Thanks so much for all the detail, and congrats again on the quarter. I'll pass it on.
Thank you. Our next question comes from Edison Yu with Deutsche Bank. Your line is open.
Thank you. And great quarter, as always. I wanted to ask a question on space data centers. And I think you had alluded to, a lot of interest. I think it's obviously become a hot topic in the industry. Can you give us a sense on how these kind of early discussions are going with potential customers interested in doing this? And is it realistic to see some type of Rocket Lab content in a space data center, let's say within the next 2 or 3 years?
Hey, Edison, thanks for the question. So I think, look, we're early with data centers. If you look at some of the models, there's a number of things that sort of have to come into focus before they become the logical choice versus terrestrial. But we never want to miss an opportunity, and we've been developing these silicon arrays and power solutions for a while now, focusing on mega constellations and these high volume power applications. But if you stand back objectively and you think about what are all the challenges with putting data centers in orbit, it boils down to really 3 things. One is cost and cadence of launch to be able to make the model close, and then 2 is heat rejection through various means, and 3 is just sheer power. Like, these are gigawatts of electrical power. So solar arrays of multi-kilometers in scale are what's needed. So, we wanted to make sure that whether they leave this Earth or not, there'll be Rocket Lab logos all over that stuff. So, as far as I'm aware, there's nobody else has a silicon solution quite like we've developed.
Understood. And to your point on heat rejection, I guess the radiator, is that a capability you have in-house that you need to develop over time, or is that something inorganic? Just curious on what needs to be kind of technically done there.
Yeah, I mean, look, all of our spacecraft have radiators. I mean, you generate heat. You have to reject it. So there's various kind of ways of doing that, piping heat around the spacecraft to radiate it. So I don't see that as a huge technical challenge. It's just on the scale that's required hasn't been achieved before. So that's the challenge there. But to be clear, I mean, I don't foresee us building massive AI data centers anytime soon. But those who are at least experimenting with it and looking to go down that path, I think we have a lot of compelling solutions.
Gotcha. If I could just sneak one quick one in terms of just the discussions, can you give us a sense of like the flavor of customers? Are these kind of new customers, non-traditional customers, kind of exploring this idea with you?
Yeah, I mean, we have to be a little bit careful here, but I would say that there's certainly more non-traditionals looking at this kind of solution than traditional players.
Great. Thank you so much.
Thank you. Our next question comes from Ronald Epstein with Bank of America. Your line is open.
Hey, this is Alex Preston on for Ron. Can you guys hear me all right?
Yeah, we can hear you.
Perfect. So I know you talked a little bit about progress on the Mynaric acquisition, but I was a little more interested maybe broadly in the environment in Europe and more generally, right? It seems like there's a growing appetite for, call it indigenous launch and national security space capabilities. And I'm interested if you sort of see this trend yourselves or how you see this developing. I know, Pete mentioned no other small launch provider has really succeeded in the last year, but it's still I think, focus for a lot of people.
Yeah, hey Alex, it's a great question. Look, one of the reasons why we like Mynaric and why we think it's important, Europe more in general is exactly that point, is that there's a lot of space nations there that have very little capability with giant aspirations and really short time frames. And I think it's always everybody's desire to build domestic capabilities. But the reality is, if you want to stand up these kind of capabilities really, really quickly, you don't have the decades that it takes to build often these sovereign capabilities. They're very specialist, often equipment and facilities, and also intellectual property and knowledge. So we see Europe as a great opportunity for us and a real expansion beachhead where we can provide solutions at the component level. We can provide solutions at the complete system with respect to a satellite. We can provide launch, and you've seen even European space agencies procure launch from us now. And once we have a footprint in Europe proper, being eligible for participating in European programs becomes possible. So, no, I think it is it's a great opportunity. There's literally billions and billions of dollars of well-funded government programs underway right now, and the timelines associated with those are conducive, or I would say not conducive necessarily always to creating sovereign capability.
Got it. And then I guess it would sound like the attitude is still broadly constructive from what you said versus maybe Europe starting to get a little more distant from US-based providers.
No, I think it's very constructive. I think naturally that Europe is looking to create sovereign capability, but I think that also the conversations we've had, they're very pragmatic and realistic that the capability they're looking to create takes a long time. So, working with, for example, a Rocket Lab Europe is a great way to move forward.
And just real quick, would you characterize that the same on launch as you would on space systems, where I think there's a bit more existing indigenous capability in Europe already?
Yeah, they're certainly giving it a good college try, but not having tremendous success, I would say. But that is just how difficult launch is. I think launch is just so strategically important. You can build all the satellites you want, but if you can't put them in orbit, it's kind of pointless. So this is the reason why you have the European Union and ESA's launch vehicles that on the face of it aren't that commercially competitive, but they'll never go away because the nations need access to orbit. So I would expect to see that persist for some time, and continue investments made into launch for Europe. But in saying that, everyone's pragmatic, and if you need to get stuff to orbit, then pick up the phone.
Got it. Thank you very much for the color.
Thank you. Our next question comes from Erik Rasmussen with Stifel. Your line is open.
Yeah, thank you for taking the questions. Maybe just back on Neutron. I appreciate the update on cadence, and it sounds like with the push out, naturally you continue to sort of build out some of those more capabilities in just Neutron, the infrastructure around Neutron. But post sort of test flight, and if we think that's sort of Q4, and if it's late Q4, I don't know the timing, but what do you think then that first revenue flight, when do you think the timing around that could be? Also, when considering that, that probably needs to have a higher level of reliability. And then with that, are you still targeting this as a recovery mission?
Yeah, hey Eric, thanks for the question. So the timing of Flight 2 will always depend on the result of Flight 1. If Flight 1 goes swimmingly, then the time to get the second vehicle on the pad, we'll endeavour to make as short as possible. If there's things to fix, there's kind of things to fix. But nominally, the timing remains consistent to what we've kind of talked about, and the vehicle will be outfitted with all of its kind of requirements for Flight 1, even for a downrange landing. We'll attempt to do the re-entry and landing burn and splash it down. Once again, if all that goes well, then the next one we would intend to slip a barge under. If we pole drive it into the ocean, then we'll probably go to a Flight 2 and get that soft landing right before we go and put infrastructure on, but that could be costly to if we damaged.
Great, and maybe just on Electron, you had a nice launch campaign in 2025, 21 successful launches. What does the manifest and internal planning suggest for this year? And then maybe just a mix between your standard Electron missions and HASTE.
Yeah, I mean, I'm not sure how much we've disclosed about that, but I mean, certainly this year we're looking for more launch than last year. As you saw, the bookings and manifest are bulging, and we're banging Electrons out every sort of 11 or 13 days now, so that's going extremely well. But I'll pass over to Adam if he wants to comment on launch schedule for the year.
Yeah, Eric. So I think consistent with prior discussions, we see good growth opportunities in Electron, and when I say Electron, I mean Electron and HASTE. So I think you'd expect increase in both standard Electron launches plus growth in the HASTE side of the business. We've nominally pointed people towards kind of 20% growth. I think is a pretty kind of I would say reasonable estimate for where we see this business growing over the near and intermediate to maybe long term. So I would say, we certainly have given the production team direction to produce significantly more rockets in 2026 than in 2025. And as Pete mentioned on the call earlier, we booked over 30 Electron launches in 25, and we always get turns orders. So look, I think if you kind of nominally assume a 20% growth in kind of the launch business, excluding Neutron, of course, I think that's probably a pretty good place to be.
That's helpful. Thanks.
Thank you. Our next question comes from Trevor Walsh with Citizens. Your line is open.
Great. Hey, team. Thanks for taking the questions. Peter, maybe first for you. Some of your prepared remarks around the OSI acquisition made it sound like that was even further enabling you with the customer as far as just attractiveness for your services, your capabilities, even though it sounded like from the announcement that OSI was actually already in the chain of suppliers with GEOS. So is the customer that focused really then, can we assume, on just the vertical integration aspect, or is there also just capabilities, functionality, features of that acquisition from a systems perspective that are also attractive? Just trying to gauge kind of how you think customers are really looking at this, if that makes sense.
Yes. Yeah, no, that's a great question, Trevor. And to be fair, the customers probably don't care that much, other than the fact what they really care about is does their sensor arrive on time at a cost and a performance capability that they've never seen before, and that's what we're delivering. And in order for us to be able to guarantee we deliver that, the most critical element of many of these optical systems are in fact the optics. So bringing and owning that optics in house, really drives certainty for us around cost and schedule and innovation. And it's that they were a supplier to GEOS, that's for sure. And when we acquired the GEOS business, the first thing we sat down with the leadership team there and said, right, where are the critical supply chain elements that might trip us up, and being able to deliver really disruptive and affordable parts or programs for our customers, and this was the number one thing. I think this makes us very unique amongst the other suppliers of payloads who are outsourcing optics, and it is the most expensive, the most longest lead item in any of these exquisite optical payloads. So it was important to own it.
Terrific. Thanks, Peter. Super helpful. Adam, maybe just a quick follow-up for you. For your prepared remark commentary around the backlog and how Tranche 3 is going to, sounds like it's maybe conservative in terms of the what's going to be recognized in that first 12-month period. Can you just maybe walk us through a little bit of the puts and takes of how what's I guess influencing that Tranche 3 rev rec? Is it just customer timing of when they want deliverables? Just give us maybe one level deeper. That'd be terrific.
Yeah, so I think we've articulated previously that typically when you win one of these programs, you can recognize revenue kind of like 10% in the first 12 months after award, then 40% in the second 12 months, 40% in the third 12 months, and the last 12 months it's about another 10%. So you got a pretty kind of normal bell curve. What I would say is that what really gates our ability to kind of move faster is really our subcon deliveries, right? So what really either kind of helps us accelerate and get through these gates and milestones and rev rec quicker is our subcon's ability to deliver on time. And so I think that that's all goes back to what Pete was talking about earlier and the importance of vertical integration. So to the extent that we can just own more of the platform, we have greater control, and that allows us to have more predictability to how we kind of time revenue recognition and so forth. So I would say that a big job for us in 2026 is to across our engineering and production teams is to really make sure we stay on top of what parts are still coming from third parties, make sure that they stay on their deliverables so we can kind of again get the program accelerated as much as possible and get more of that revenue recognized. So again, we go into it pretty conservative. I think if you look at the pure conversion, that 37%, I think that was mentioned earlier of backlog converting, I mean, obviously a portion of that is launched, but the portion that's related in space systems, some of that is coming from the components and subsystems completely unrelated to SDA Tranche 2 and Tranche 3. But what is in there for Tranche 3 is, again, assuming some pretty conservative delivery dates from our subcons that hopefully we can work with them to do better.
Great. Thanks, both. I'll leave it there. Thanks for the questions.
Thank you. Our next question comes from Ned Morgan with BTIG. Your line is open.
Hey, you actually got Andre on. I don't know what happened there, but all good. I wanted to ask about space systems. Seems like it came in a little bit weaker than what consensus might have expected at first. So just wanted to know the puts and takes there. I know you explained it, but why might have consensus gotten a little bit ahead here in the quarter?
Yeah, I don't know that consensus does a great job in breaking out the various pieces of the business, even differentiating much between launch and space systems. And certainly within space systems, I'm not sure they really look at between kind of our platforms business versus the subsystems business. So one of the things I mentioned this in my prepared remarks is that it is difficult to, I would say, I mean, you can't, to the extent that you can control the execution for your RevRec requirements under ASC 606, it just depends on how well your subs are executing, right? And how tightly you're working with them to make sure they stay on track. And to your best efforts, I think we've all seen in some fairly public venues, customers, of these programs talking about how there's been some snags in supply chain, including, from those, for example, like from the optical terminal providers. And so if you look at what we do is we continually look for ways, as Pete mentioned, to just reduce any kind of dependency on third parties as much as we can. That's why if you look at Electron, how vertically integrated that vehicle is, Neutron will be very similar. We're getting that way more and more with our space systems platform offerings, where very little is still, I would say, outsourced to third parties. So it's really just a function of, again, you work with them and get them to deliver as aggressively as you possibly can, while not sacrificing quality or cost where you can. So yeah, I wouldn't read too much into the granularity that people may have expected from our space systems business, because one of the benefits that we have now from having such a diversified business is we really just look at the top line. How can we deliver that sequential growth of the business? And sometimes more of it's going to come from launch, and sometimes more it's going to come from space systems. And within space systems, platforms can have a great quarter and components can be weak, and vice versa. And then, it just gets that much better, and we'll have that many more tools at our disposal when we have Neutron coming online, which is why obviously getting that first flight off is so important, why we're all looking so forward to that.
Yeah, no, that's super helpful. Thanks, Adam. I guess to stick with you, I mean, around the two acquisitions that were just announced, are there any financials that you can give, any kind of color as to what they were doing on a performance basis, and I guess just how much cost we might be able to see taken out as a result of them being brought in-house?
Yeah, our pipeline is always kind of interesting. It's got a mix of kind of more needle-moving deals from a financial perspective as far as, revenue, contribution, so forth. These particular deals were really much more strategically around, again, vertical integration, reducing risk versus, I would say providing big access to large external third, kind of TAMs, if you will, or adjacent markets. So these are really more, I would say, reducing some margin stacking and also just taking greater control over the programs. So I wouldn't say there's not I would say, a material amount of revenue contribution that's going to move the needle from the deals that we just announced. Clearly, Mynaric would be a different story if and when that deal gets approved, because that would come with significant backlog and revenue opportunity. And again, our pipeline also has lots of other deals that have a mixture of just, again, elimination of margin stacking, and in some cases, also more meaningful revenue contribution. But these two, I don't think you need to change your models at all for the impact for these two relatively small deals.
Got it. That's helpful. I'll leave it there. Thanks, Adam.
Mm-hmm.
Thank you. Our next question comes from Gautam Khanna with TD Cowen. Your line is open.
Yeah, thanks. Good afternoon, guys. I was wondering on the Neutron tank failure, have you guys, are you have high certainty that it was that manual layup process, and therefore the new process is not going to have the same anomaly, or is the study still ongoing of what happened?
Yeah, no, we undertook a complete failure tree analysis, and we're able to find the piece of tank that caused the initiation of the failure. We're able to reproduce the results through analysis, and then also through coupon testing as well. So no, we're very, very confident. We understand that failure extremely well.
Okay, that's great to hear. And then you mentioned some areas where you'd like to take more in-house vertical integration. Can you describe some of those product areas that might be of interest?
Yeah, I think if you look across a spacecraft these days, the areas that we still don't have 100% control of are starting to get smaller and smaller. We have a great RF team, but I think that's an area that we will look to bolster, and we'll seek opportunities, to add scale where possible. But I think this is just going to be bread and butter for us to constantly make sure that we don't get stung with suppliers that aren't able to deliver for us and continue to vertically integrate. But as Adam pointed out, our M&A pipeline is pretty full, and there's a range of opportunities there from these kind of things that Adam pointed out don't add huge revenue bottom lines, but they kind of guarantee revenue because we're not going to miss milestones. But they're all ranging through to some real needle movers that are much more transformational. As Adam also pointed out, we're always making sure that we have plenty of capital reserves to go and do those more meaningful acquisitions.
Thank you.
Thank you. Our next question comes from Ryan Koontz with Needham & Company. Your line is open.
Great. Thanks for squeezing me in. I want to ask about backlog, Adam, your commentary there as you think about the opportunities ahead over the next, say, 12, 18 months. Obviously, the SDA has been very, very active, and how you think about the composition of your backlog relative to DoD versus commercial, just in terms of the next 12, 18 months.
Yeah, I think we're in a really fortunate spot where traditionally government business has not really been ever viewed as a hockey stick. I think for us, since we're coming in such a disruptive way, and we're disruptive, but also the whole architecture where you've gone from GEO to LEO, and the number of satellites that are required to support that architecture, has just been so strong. We've got so many things that are pushing us in the back as far as kind of where the opportunities are. But I'd say overall, we've got really big commercial opportunities that we continue to chase, even though for me, if I was given the choice of chasing a government hockey stick or a commercial hockey stick, I would take the government hockey stick, because even though they may not be as dynamic in some cases at a program level as commercial, they always pay their bills. They're pretty clear cut how you work with them. And, in that government market, we're just competing with people that seem to be fighting with their hands tied behind their backs, right? So we move much more quickly. We have a lot more tools at our disposal because of our vertical integration. So I love the mix as it's trending towards government. I do think, it's also very comforting to have this big commercial hockey stick opportunity out there as well. But I would say that, it's the pipeline. When you look at the pipeline of kind of business opportunities, forget the M&A side, it's a pretty balanced set of opportunities between commercial and government. I'll let Pete kind of provide his view, but it seems like we don't just have a choice of kind of taking one fork or the other in the road, where we can try to think about how do we take both of those things. And I think we've done a pretty good job balancing, but maybe Pete wants to speak about that.
Nice. Thanks.
I think you've said it perfectly, Adam. Yep, I can't add anything better than that.
Great. Maybe just a quick follow-up. As you think about, Golden Dome and timing and, PWSA fitting into that architecture, any updated thoughts on, your role there or opportunities when you think that emerges as a truly viable, business opportunity for you?
Yeah, I think Golden Dome's quite a complex one. As obviously it's a huge program, but it's a lot of it is also classified. So it's very difficult to discuss too much. But I would say that in multiple fronts, I think we're well positioned to have a good chunk at this, whether it be launch or satellites, optical terminals, a lot of the optical payloads. The SDA win, the Tranche SDA win is a clear missile track payload, which is a very complicated payload, obviously, and critical for the Golden Dome. So, as that program formulates and continues to grow, I think we're a pretty key piece of that foundation.
Helpful, Pete. Thank you.
Cool.
Thank you. Our next question comes from Michael Leshock with KeyBanc Capital Markets. Your line is open.
Hey, good afternoon. I wanted to ask a longer-term question on a potential future Rocket Lab satellite constellation, just given some of the recent announcements across the industry. And as you mentioned in the presentation, the significant growth in satellites that's expected over the next decade. Have there been any changes to your approach on a future constellation of your own, or what potential applications you may target? Or is this still a longer-term growth opportunity that really won't be a priority until Neutron is launching consistently?
Yeah, thanks for the question, Michael. I think what's kind of cool here is that you've all heard me say that space is going to get blurry. It's going to be difficult to determine what is a space company and what is something else company. And that continues. That thesis really continues to firm now that you look at data centers and all these other kind of opportunities that are growing in space. It is that the large successful companies are going to be blurry. Are they going to be a space company? Are they a telecommunications company? Are they a data services company? Your point is really accurate. And until kind of Neutron's online and we have multi-ton reusable launch capability, I think that's the time that we can really lean into deploying infrastructure. But in saying that, we're not sort of sitting back and sitting on our hands thinking about what we could do. I think you can see in just about every avenue, we at least have knowledge or components or exposure. When I say every avenue, every kind of opportunity that's potentially being thought about or used in space today. So it's still too early, Michael, but there's not a day that doesn't go by where there's not an internal discussion about it.
Great. And then maybe on the stage 1 tank rupture, I don't know if I missed it, but how fast can you produce the second tank now with the new AFP machine? And then will that get even faster as you repeat this process over time?
Oh God, yeah, like it's ridiculous. The AFP machine is just totally ridiculous. I can't remember the exact timeline to lay up a dome, but we measure a dome manufacture on the AFP in days. Actually, the longer pole in the tent there for tank manufacture is not actually laying up and curing the components. It's the joining of the various domes and tanks and barrels together, and all of the tabs and details for baffles and all those kind of things actually take the time. But a new tank, we're talking months here, not for a complete tank. But from an actual manufacturing of the raw components, it's ridiculously fast. And also, that's to Adam's point. It's like now that it's all automated, really the only cost is the raw material that's going in there.
Great. Appreciate all the detail.
Thank you. Our next question comes from Jan Engelbrecht with Baird. Your line is open.
Good afternoon, Peter, Adam, and Morgan. Thanks for taking our questions. I'd like to just go back on PWSA and just get your high-level thoughts about that program. It does seem like your focus will shift more towards the tracking layer, given this really impressive win, the GEOS acquisition. Just how you're thinking about the future of that for Rocket Lab, and then also we've heard a lot of government reports being issued on the transport layer piece. Like, how difficult would it be for a commercial variant like Starshield with MolNet to sort of act as the transport layer? It seems like there's a lot of things that would stand in the way of that, because a commercial Starshield orbits at much lower altitudes than the transport and tracking layers. There would be a lot of redesign work. But I'll stop there and just to get your overall thoughts there.
Oh man, we could geek out about this for days, Jan. So yes, it was intentional for us to move up the value chain, if you will. Not that the transport layer is elementary. By no means is it elementary, but it's an order of magnitude more difficult more valuable to be able to doing the tracking stuff. And the tracking stuff is critical for things, as things develop for Golden Dome and other kind of programs. So that's the high value stuff where you want to be, that there's really only a few people in the nation that can successfully execute on. With respect to the transport layer going away, I mean, we haven't heard or seen any evidence to that. Obviously, there's a lot of discussion about other providers, but the whole point of the SDA program is kind of all of the spacecraft are integrated very closely with each other, even though they're from other providers. There's a set of requirements that we all must meet for interoperability. So I think your point is a good one. It becomes more difficult to have interoperability when you have something that's quite different. But it'll be interesting to see how it all shakes out. But I think for the tasks that SDA is trying to achieve, to me at least, it makes more sense to have a dedicated transport layer, and then the other layers, of course, tracking and then custody and so on top of it.
Thanks, Peter. Very helpful. And then just a quick follow-up, if I may. Want to be respectful of the Mynaric deal, let that play out as it will. But on optical terminals, at which point, and again, hoping like it works out well here, but at which point do you potentially look at not maybe an alternative supplier of OCTs, or does GEOST or the new acquisition OSI have any capability that you could look towards developing these optical terminals over time?
Yeah, so GEOST has developed some optical terminals, and obviously we have the optics now in house as well. But it's incredibly difficult to do. And as we look across we looked across the landscape of all of these optical terminal suppliers, of which there's really only three. Mynaric just stood out as the absolute best with respect to technology. Now they suck at other things, like running their business, but they make the best terminals. So to go out and develop your own terminal, yep, totally feasible. It's just a time thing, and it would just take longer to do that than it would to acquire it.
Perfect. Thank you. Very helpful. I'll jump back in the queue.
Thank you. Our next question comes from Jeff Van Rhee with Craig-Hallum Capital Group. Your line is open.
Hey, this is Daniel Hibschman on for Jeff Van Rhee. Congrats on the quarter and the SDA win in particular. On Mars Telecommunication Orbiter, the 750 million there about. Wondering, it looks like earlier this week NASA put out an RFP for a Mars Telecommunications Network, so a little bit of a name change there. Sounds like that might be a multi-satellite architecture, where previously they were just looking at that one single orbiter. But anyway, what can you tell us just about how the competition and Rocket Lab's positioning for that's been evolving?
Thanks, Jeff. Great question. Yep. So, the MTO, as you point out, there's a slight change there to network. As more infrastructure is built on Mars, then of course a network will need to be created. The MTO was always intended to be the first of more to come. Look, obviously we think we're well positioned here. We have the experience, we have a lot of the capabilities and a lot of the demonstrated capabilities. But I think we'll put our best foot forward there, and of course others think they can do the job too. That's the great thing about competition, and we'll see who wins.
And then Adam, one for you just on the gross margins, which obviously are growing tremendously. I think 8 points up in 2025, and then the guide for Q1 26 has those stepping back down a few hundred bips, and you called out the space system mix shift. Is there anything persistent about that mix shift, either in terms of the new business coming online and potentially with the SDA transport layer, that it's going to have some persistent margin pressure, or should we be assuming in our models that we'll be getting right back to that, more normal cadence of a few hundred bips of expansion, as we get back into the later half of the year?
Well, I think gross margin there's a lot of things that are going on underneath the surface there. So, as we continue to grow, there was a question earlier from Eric about the Electron launch cadence. So I mentioned a 20% launch cadence growth in that. To the extent that we can do better than that, which I think there's opportunities to grow faster in 2026, then that's going to be a positive upward bias to margin. These larger, longer-term programs like SDA Tranche 2 and Tranche 3, they typically come in at relatively low, at the low end of our gross margin mix, but they have really good operating margin kind of characteristics to them, or contribution margin, because of the fact that there isn't a tremendous amount of incremental R&D that's kind of outside of the programs. So I would say that in a quarter where you've got a lot more contribution from the big programs like Tranche 2 and Tranche 3, that'll put downward pressure, offset hopefully by growth from increased in the Electron contributions. The components business has a quite interesting range of margins. You have some products in there that are more towards, say, 30 points in non-GAAP gross margin, other ones that are kind of north of 70 points of non-GAAP gross margin. So there's a widespread, and mix is hard to predict that far out in the year. I mean, I do think there will be a supportive trend towards gross margin, but I think it's difficult to really get a lot of granularity kind of much more than I'd say maybe 1 or 2 quarters out. But overall, I think as we continue to kind of grow that components mix of the business, more Electron in the mix, it's all going to be positive. Now, I think the one caveat to that is, as we bring Neutron into production, it'll have a margin expansion curve, probably not too dissimilar to what we've experienced on Electron, which has been incredibly, it's been a great margin expansion story. But when you bring a new product like a rocket to market, you do things like block upgrades, and then that all helps bring down cost, increase performance, so you can sell out more capacity on the rocket, which is helpful to ASP and so forth. But I think the most important thing in the launch business is rate, right? So it's all about absorbing your fixed overhead or fixed cost related to that program or product. So I think that you're going to see what we'll start to do. Our plan is to give you guys as much clarity as we can, or break out between Electron, for example, and Neutron as that comes into production, so you can see that continued expansion and kind of that Electron business operating at model, and then the trends as Neutron ramps, as that goes towards target model as well. Hopefully, it's a bit quicker to get to target model, target margins on Neutron, because it's a reasonable launch vehicle, but it will still take several years. So you'll start off with fairly kind of low to even maybe negative gross margin for some of the early flights, but then again you'll see, just like Electron, to pop back up and become pretty positive pretty quickly and get to target model. So it's a long-winded answer. I do think, again, the trends are supportive of gross margin expansion, but it could be a little bit kind of volatile and hard to predict quarter to quarter when you get more than 1 or 2 quarters out.
Thanks, Adam. Thanks, Peter.
Thank you. Our next question comes from Suji Desilva with Roth Capital. Your line is open.
Hi, Pete. Hi, Adam. Congratulations on the progress here. Just real quick on the Electron launches. Are there any ASP trends to note, Adam? Any tailwinds in the second half, or are they fairly steady next couple of quarters?
I think we're going to continue to see a march towards I'd say as we increase more of the mix towards HASTE, that's helpful to the ASP. I think margins are relatively consistent, because even though HASTEs are priced higher, there's a lot more mission assurance and other things go along with them. So absolute dollars are higher. The gross margin percentage is relatively consistent across HASTE and Electron. And then so I would say overall, we've seen a very nice expansion in ASP over the last several years because of the increased mix from HASTE, and I don't see that changing. In fact, we continue to grow that subsegment of the business quite nicely. And again, I just, given the things that Pete was talking about earlier, regards to Golden Dome and the importance of the hypersonics test capabilities, that's a really strong area of growth for us going forward. So I think overall, a positive bias towards higher ASP per launch, just as we've seen over the last several years.
Okay. And my follow-up question maybe is for Pete. Pete, maybe you can reflect on versus a few years ago, to get to the launch cadence, the customers' payload readiness was something that was variable. Has that changed? Has the nature of the customers changed where you can feel more comfortable that you can hit a 11 to 13-day cadence? Is it just a higher number of customers coming in that you can kind of load them off, or what? Just any color that'd be helpful.
Yeah, thanks, Ajit. I would just say that we've probably got better at looking like a duck, where it's just, on a glassy pond and it looks normal and there's legs flat out underneath it. And with a higher cadence gives us the ability to move customers around. So I would say that, that's just the reality of the launch business. Payloads are ready until they're not. I think we've just got way better at managing those customers, having more whip, having more rockets integrated, ready to go, and managing that. So it's great to hear that it looks smoother, but behind the scenes there's everyone's flat out mixing and matching and making sure that it all looks smooth from the outside.
Helpful color. Thanks, Pete. Thanks, guys.
Thank you. Our next question comes from Kristine Liwag with Morgan Stanley. Your line is open.
Yeah, hi, this is Justin Lang on for Christine. Thanks for taking the questions. Pete, curious just back on the Neutron timeline. Had you not run into the stage 1 tank issue, would the program have met the earlier goal of getting to the pad here in 1Q? It sounded like from your earlier comments, there's a good volume of qualification work completed in the quarter. So just trying to assess whether there are other factors at play in this new timeline or are really isolated to the stage 1 tank issue.
Yeah, thanks, Justin. It's kind of hard to say because when the tank let go, the reverberation went through the test stand and the entire business. So the moment that happened, everybody just stopped what they were doing in a lot of sense to get onto the tank to figure out what went wrong. So, we moved a lot of resources around and from lots of parts of the business. So I'd have to go back and have a look and see if we played everything forward, whether what that timeline would have looked like. But it's sort of hard at this point because we had an anomaly.
Okay, fair. That makes sense.
I would add one more thing to that. I think if there's a silver lining to the tank anomaly, is the fact that because of what happened, it just has given the other kind of subsystem teams the opportunity to really kind of fully exercise all the demons, if you will, is much more than they could have under the compressed time schedule that we were working towards. So in some ways, the tank letting go will create certainly a lower risk test flight when that happens later this year. So I think, yeah, it's nobody's ever happy when you have an anomaly. It's something that wasn't planned and certainly wasn't anticipated. But I think it does help us bring down the overall kind of risk stance of the program as we move towards that first test launch.
Got it. That makes sense and helpful. Thanks. And Adam, actually, just one for you. Back on the SDA award. Curious if you could speak a little bit more to the cash profile in particular and how that lines up against the revenue bell curve that you sketched out earlier. Thanks.
Yeah. So actually, kind of interesting with these types of programs because of the way that you do the accounting and the rev rec. So under ASC 606, we model these things so you always have to be in a positive cash position. So when you kind of work out your milestones and how you're flowing out dollars to your subs and so forth and spending money on the program internally, you always need to be in a position of positive cash in order to be able to recognize revenue along the way. And so this program is consistent with that. We've gotten some questions as to whether or not the partial government shutdown has impacted our customer, in this case, ability to pay. I'd say no. In fact, we got a very large payment earlier this week from that customer. So the money's still flowing, and everything seems to be green lights right now.
Okay, thanks both.
Thank you. There are no further questions at this time. This does conclude the program, and you may now disconnect. Everyone, enjoy the rest of your day.
All right.
Cool. So what do you guys think?
Not bad. I'm hearing somebody's music still.
Yeah, there you go.
Well,
I was a little bit disappointed they didn't let him do a closing remark, but generally speaking, those are pretty quick anyway. So maybe they were just tired and ready to get off the call. I don't think it was them. I think it was likely the conference call person that shut it down. But I was hoping for something.
Yeah. Guys, I just realized this delay, it sounds much worse than it is because we were going to launch in Q2, Q3 anyways. So let's say if the launch was in, July or August, and then it's basically that's Q3, or that is Q3, and then they moved it 3 months. I think it would have been better if they say we anticipate that this created a 3-month delay in the launch.
I was expecting like second half of the year anyways, just a conservative second half. Like I would be unsurprised if this was like a Q3 launch, but yeah, I don't know. I think we'll see it stacked in Q3 for sure.
Yeah, I think that what they were kind of holding to was, if you think about it, remove a month time, right? And we're mid-January, just when the tank kind of blew. Everything's pretty much in alignment to be fully integrated. And so I still think that there's plausibility that if everything had gone to plan and they were able to get it all qualified and tested, they could have gotten it on the pad by the end of the quarter, as they were expecting. I think the problem that people are kind of seeing right now is no, I wasn't falling on my sleep. I was looking at my phone. Although I am tired today. But the thing that I think people are hearing is, okay, 1Q, and then it's going to get delayed 9 months, right? Because it's the fourth quarter now. It's like, well, they never said they were going to launch it by 1Q. They just said they're going to get it on the pad. Now they're actually explicitly stating, like you stated, they're actually going to launch it by the fourth quarter. So whether or not they would have claimed that it would have been second quarter or third quarter, I'm not 100% certain for an actual launch, but I just want to give people some clarity. Like, they're not delaying it 9 months, right? I still anticipate that the integration is going to happen within the next 3 to 6 months. So whether or not the delay of launch was actually 3 to 6 months, I guess, is dependent upon what they meant by on the pad by the end of 1Q. But I think overall, if you kind of remove that piece from it, well, first and foremost, it's nice to see that the AFP machine will eliminate that joint that was kind of the main reason for the failure. So it's nice to see that that's something that, at least if we have another failure, it's not something that's consistent. It's something else that we can remediate or hopefully eliminate in any sort of defects. And then second, it seems like the rest of the company is firing on all cylinders to really get after everything, right? The space systems is going to continue to do well. It seems like Haste in Electron are continuing to ramp up with just another Haste launch here happening in the next couple of days. There was actually supposed to be one yesterday. So exciting to see that the company is really firing on all cylinders, and awesome to see also that they're getting those like supply chains, right? That are really beneficial, right? Like, I was looking for so many companies that they could be acquiring in the space of optical or what have you, and neither of those two companies came up in my list of like who's supplying to Geost or anything like that. So cool to see that Rocket Lab's able to continue, their acquisitions, and I'm sure that those guys are willing to get their paycheck, and I'm sure they're going to be brought on too. Like, I'm sure they're going to be like, hey, we'll bring you on and likely expand the amount of money you're able to make. Please come on and help us integrate this into the business. And so anyway, I'm just cautiously optimistic that everything that's kind of going on, other than that stage 1 delay, is going to plan, and things are going in the right direction. So for me, as somebody looking at 2035, holding this company, it's like, okay, well, maybe we'll be a launch or two cadence behind because of this delay, but overall, the company is still heading in the right direction. So for me, business as usual. And I guess if people are going to be asking, hey, does this mean it's a good buy right now? I think it always goes back to, what are you buying it for, right? So at the $70 share price that you're at a a 35 to $40 billion market cap. What does that kind of mean in terms of whether it's a good buy today? Well, I think if you're buying for today, it's going to be tough, right? I think valuation versus where we're at today in terms of share price, is it worth it for today and today only? I mean, Probably not, right? You're spending more than you're making. You don't have a Neutron on the pad that you can say is going to be. But if you're looking for that forward potential 5-10 years down the road, where Adam was lightly saying, hey, they're going to be splitting out Neutron and Electron revenue streams, so you can actually see the gross margin increases over time. They're getting themselves in the situation where in 5 to 10 years time, they're going to be looking at a way bigger piece of business that they're going to have to be focused on. So with decent growth rates, right? 20%, they were kind of stating for Electron and Space Systems kind of on a nominal basis. So of course, in the shorter term, it'll likely be higher than that, but over the long term, probably close to 20%. With Neutron kind of being split out from that, hopefully being able to increase exponentially over the next coming years by a couple 100%, year over year as they get cadence up and to the right. So I don't know. For me, it seems like business as usual, and I'm gonna continue, especially at this lower price. Not big buys. I'm not saying I'm gonna be adding thousands of shares, but every time I get paid, I'll be more than happy to buy my little chunk of Rocket Lab every time.
Mm-hmm. Yeah, to echo what you're saying, Matt, it's just sure it's a bummer, the Neutron setback, especially for those of us who have been invested in the 2024 rocket, right? But it's kind of like no matter how you slice it, it's like not the biggest deal. And I think this is why we spend so much time fixated on the non-consequential items like reaction wheels or haste, for example, as well, because in times like this, it's like it's easy to just kind of be upset about the Neutron, and want to sell your whole position. But then you really zoom out, it's like they had record quarterly revenue, record annual revenue, record backlog, record adjusted EBITDA margins. And one thing that kind of got lost in the call was that debt dropped from 70 million in Q3 to less than 2 million going forward, largely due to that raise. I also saw in the chat a few people mentioning, are they going to need to raise again with this new Neutron delay? I wouldn't rule it out because, for like acquisition purposes and whatnot, but Rocket Lab has a liquidity of $1.1 billion. And if we're assuming even like a $50 million per quarter burn, that's like Rocket Lab is set for years without the Neutron launching, So I'm not too worried about that at all.
I wouldn't be worried about an expansive dilution. I mean, I think there's going to be continued ATM and continued share-based compensation, but nothing huge.
No, yeah, and especially with the valuation that Rocket Lab sees right now, it's like I would almost penalize them for not raising money. Well, I mean, if they hadn't already done the ATM, I'd kind of, and the share price came right back, I'd be like, maybe you guys should have raised that capital when money was easy, but it's nothing to really worry about in my opinion. And then kind of turning to Electron, Peter mentioned that they're banging out electrons every 11 to 13 days now. And Adam kind of passively mentioned like a 20% increase to electron cadence, which would be, 21 from last year times 1.2. We're looking at indirect guidance of 25 electron launches this year. Like I think that'll probably, I think it's probably going to be closer to 30 personally. I know we're off to a bit of a slow start, but those launches that keep getting pushed to the right are really starting to stack up, and they're going to need to go off fairly, in short order. I'll put a pause. I'll put a pause in things right there. I want to hear more from you guys. It sounds like Archimedes is having a few little hiccups, but it's nothing too big of a setback like that tank.
Yeah, did he say anything specific about that? I didn't hear anything where I was would have been confused or take that like.
No, but he just said that they're putting the engines through a boot camp and that they're like being really rough on the engines. I don't know. I didn't sense that there's any trouble with the engine testing.
No, and it's kind of validating. 'Cause I think it was like 2 or 3 weeks ago, we were talking about like, hey, I heard through the grapevine that a couple engines blew up, and that was when Rocket Lab share price went down. So of course we're spreading FUD and speculation. And it was like just a few days later where Peter Beck himself was like, yeah, the engines have had failures. They're expected to have failures. And who's the author? Is it Eric Berger on that one? Yeah. He's like, you're looking for a story where there isn't one. And that's, in my opinion, what we are saying on the show is like, this is why they haven't had an SEC filed document, because it's like, yeah, the engines aren't going to fail or explode, whatever term you want to use for that. I mean, by definition, the engine going off is an explosion. So yeah, they're going to explode for better or worse in that test stand.
Yeah, I'm excited. I mean, to me, business as usual. Yes, I'm disappointed. Like, I'm not going to lie. Like, I was hoping we'd be able to get Rocket Lab off sooner, Neutron off sooner rather than later. Who isn't, right? Like, I want to see that candle get lit. But at the same time, the business is continuing to impress me in ways that are continue to be great. I think that those acquisitions, while small, are going to help streamline the supply chain, and are going to be huge in the long term, specifically when we get to gross margins, and specifically when we get to making sure that we're able to increase cadence as much as possible for future Flatellite, which I anticipate is going to include optical and communications devices there. So yeah, I wasn't expecting anything too much on Flatellite, although the thing that was kind of surprising is the move for Solero to kind of get into silicon, which, I'm not too familiar with how the Solero solar arrays are really used, but from what I'm kind of understanding is like they don't necessarily care 100% about being able to have these solar arrays last for 30, 40, 50 years, because these data centers are likely to only be up in space for, a couple years at a time, when they need to potentially relaunch new ones for higher capacity. So who knows if that's just like a engineering piece where the solar panels don't necessarily be as space grade, and they're more so concerned about getting the margins better so they can have a much larger solar array rather than specifically maybe high density, solar arrays that are supposed to last for 50 years on a different planet, or 50 years on a satellite that's going off into deep cold outer space. If you're getting closer to Earth, or really focusing on always being faced towards the sun, maybe you don't need to necessarily worry as much engineering factors. Why they're moving towards silicone, I'm not 100% certain, but to me, seems like they're excited about it. And the fact that you're going to be able to be involved at all, it's a new thing for them, because while they've developed things for the James Webb, the legacy company Solero has developed things for the James Webb, and the Mars Perseverance and everything like that. It seems like this is a good step into the right future for where other people want to head, and could end up getting contracts from big people like NVIDIA or Google or whomever wants to put space centers in space. And I'm sure we're going to see those names kind of come through, and the headlines will just pay for themselves at that point. That'd be really cool to see.
I also just want to give my 2 cents. I see people are commenting on the stock price, and what's interesting in this earning is if you take out the Neutron earning, or like if you take out the Neutron news and you just exclude that and you look at this earnings, this was an A++ earnings. The company is growing really fast. Margins are increasing. There's good guidance. SG&A is becoming a smaller part of revenue. It's everything that you want to see. And I also really want to see Neutron, but for the long-term investors here, like as Matt was on point, like does the 2035 or 2040 price change of Rocket Lab because Neutron was launched 3 months later? I really don't think so. If we understand that they are setting up a production line, and I do think that these huge qualification tests that they're doing, maybe we will get an interview. By the way, Muriel answered me today, so maybe there will be an interview. We can ask them. I don't think that they're doing these again. Like they will know the, like what each part of the rocket, like they will know the limits, what they can do, what's the trouble points, and then the next production parts that are coming off the line, they will be better manufactured, and they will just check like, okay, is it as we planned it last time? Okay, good, slap it on the rocket and go. So if you understand this, all these hiccups, they're actually speeding you up in the long term, because like this tank exploding means that a Neutron rocket didn't explode. We have a more reliable rocket, so I don't know. I think it was really good earnings. The Neutron delay just sounds worse than what it is. It's 3 months delay, and I think for the people that are here for the long term, if the stock price falls on earnings, good, you get to buy for a cheaper price. I mean, that's my opinion.
Fair. Yep. Yeah, can't complain. Not a bad earnings at all, even with that Neutron delay.
Vince, you buying more?
Things to say?
No, are you buying more?
If I have money, yes, I would be buying more.
Yeah.
I'll be buying more at this rate as well. Seeing that.
Are you? There you go.
Yeah, I mean, I trimmed it. I think it was the mid to high 80s, and I'll probably add that back. Just looking at the share price now, like, it's one of those things. I'm never trying to time the top, never trying to time the bottom, but sometimes it just works out how it's working out.
Well, congratulations. Yeah. Congrats on being able to buy back lower. I guess my question for you, Scott, the IDIQ piece that kind of came through, I don't know if I missed that in the past. I think it's, and you kind of noted that you had read through it with the Redwire, new earnings that came out earlier this week. So I'm kind of curious, could you give more color on that, particularly because it seems like you've did a little bit more deep diving. I mean, you stated that at most people might be able to get, not at most, but on average, $2 million a contract or whatever. But is that something where there's going to be 5 or 6 key, prime contractors, and the rest are going to be, smaller supporters, or how's that going to be kind of feeding into it? Because some people might be now hearing, okay, well, there's potential, $5 million or something versus potential for billions of dollars for Rocket Lab.
Yeah, it's not as big, I don't think, as I don't know, especially with so many companies involved. And yeah, like when there's 2,400 that were announced, like it's not, it's easy to kind of get lost in the shuffle. And actually, the reason that I'm so familiar with it is because you guys know, friend of the show, Space Investor, he pointed out on January 15th, I think it was, that Oakman Aerospace was one of the people on this list. And for those unfamiliar, Oakman Aerospace is a now wholly owned subsidiary of Redwire. So he kind of pointed out, like, hey, this is Redwire that indirectly that's on this list. And then Redwire announced it like 2 weeks later, and the stock popped 30%. So I thought that was a little bit odd of like, we already knew this, but I guess we didn't know this. But yeah, I mean, I think it's one of those things. It sounds better than what it's going to be. Like if you kind of do really boil it down over the 10-year period, it's only like 6.2 million if you were to distribute it evenly among all the companies. But kind of given its nature, and I don't mean to like turn this Rocket Lab stream into a Redwire pitch, but like Redwire is building their like very low Earth orbit platform. And I think something like that would do really well. Like I think any of the Earth observation companies might do really well on this, just because they have the data, they have the proof points of like, yeah, we can, like, do you want us to watch for missiles? Because that's literally what we do. We have all these satellites in orbit and they're watching the ground. And I mean, that's also what Rocket Lab has really been heavily scaling into. So I don't think it's going to be like, I don't think it's going to be evenly distributed among the 2,000 plus companies. I think it will be a little bit more like not one winner, but like maybe, I don't know, even like a quarter of the applicants are probably going to get the majority of this, in my opinion. And I think Rocket Lab, Redwire, and of course all the legacy guys, I think they're going to have an outsized piece of this pie, in my opinion. But
So while there's 2,000 people eligible, you're thinking maybe only 500 will probably take part, and maybe 15 or so will actually get a sizable amount of that 115.
yeah, I think so. So like even still, it's only like going to amount to what, like, I've been doing too much math today, like 25 million each per year, something like that. Like, so it's not nothing, but it's not like, I don't know. It's easy to see the $150 billion figure and kind of be like, oh shit. But yeah, spread it among those companies over the 10-year period, and it's like not quite as fancy. But
so some that might get tens of millions, some that might get, hundreds of millions a year, but nothing that's going to be billions a year.
Yeah, exactly. And I think I think there were, I don't remember the number, but it was like a very, very small amount of applicants were denied. So I think that like there's probably a lot of companies in there that are going to kind of be double clicked on and be like, oh, definitely not these guys, definitely not these guys. But then you're going to see, the Rocket Labs and Redwires, the guys actually doing stuff, and kind of, highlight them. Yeah.
All right, cool. I mean, if any guys in the chat have questions about the earnings, or if you guys want to get in any last comments,
yeah, no, that's pretty much everything. It's also Peter's commentary on that second tank being totally ridiculous to make with the AFP machine. I think that was a really good sign too, just with the whole setback with the first tank. And yeah, once that thing gets rolling.
He sounded really confident, by the way. Like people pointed it out also in the comments. But I mean, if your program is not doing well, like you don't make these jokes, and you don't you don't sound the way you do. Yeah. So I think we're doing good.
And was it just the tank? Was it just the tank that was done? Or was it the whole structure? And I guess I'm assuming that was the tank that was really the failure mechanism, and not, because that's what they were testing really, was the tank that was inside the holding structure itself. Because the holding structure didn't necessarily look as well put together as, say, the most recent interstage that was kind of put out and much cleaner looking. But regardless, like you stated, it was good to hear that it was third party.
Mm-hmm. I wonder what happens with that too. Like, if Rocket Lab can prove that it's not their fault that the tank collapsed or blew up, I guess, like, do we have to pay for a second tank right now, or are they? How's that going to pan out? Do you guys figure?
It made it seem like that it wasn't add massive amounts of capital to what Adam was saying during the conversation. And he also stated, based off of what I heard, that they had to kind of pay because it was hand laid, like, so very much manual intensive labor to be able to create that stage tank. And now if it's done with the AFP machine, it seems like it's just materials, and you kind of just let it do its thing, right? Like, yes, you need to supervise it, make sure that it's filled with all the carbon fiber, etc., that needs to be able to fabricate, but it seems like it's going to be much lower cost. So in terms of the incremental spend, not so much, versus the amount of time that it's unfortunately going to have to add. If you think about it now, it's like it's still not made. It's a month later, a month and a half later. And by the time it is actually done, you still have to qualify it, which who knows how much time that's going to take. And so it's probably going to add a couple months, unfortunately, for much less cost, but you still have to pay for it.
I'll throw
I think it's also relieving as well. Like, so many people are going back and forth. No, it wasn't third party. Yes, it was third party. And I kept hearing, people talking the other side, so much so that I was like, oh, I thought it was third party. Then initially somebody said, no, it's not. And so I was like, okay, no, it's not. And so I had to go back and forth twice, to the point where I was surprised coming into this presentation again today that it was a third party, because somebody had convinced me that it wasn't. So, that it goes back and forth to be like, always try to understand who you kind of are listening to with some of these things, and the FUD that people are potentially spreading. One, because they don't want the company to succeed. They're SpaceX investors. They want Rocket Lab to go to zero, whatever reason. Two, they might have just, heard something through the rumor mill and just taken it as gospel, because they trust the person. And you don't know when you hear something secondhand, how many times that data has been passed through somebody's filter. And then third, just like CRP Beck said on the call, people are going to be making stuff to get headlines. Rocket Lab is a very hot company to talk about right now. And so people will just say Rocket Lab or use the ticker symbol in their articles just to get views, unfortunately, and reduces some of the integrity of what we have. But I try to let people know, when I don't know something, I don't know. I might say something, but I'll try to caveat it and make sure that you're listening for those caveats, because I'll try to explicitly state when I know things and when I'm kind of beating around the bush. But it just goes to show you, this was a case where I even got duped, thinking that Rocket Lab made this tank, and who knows how long it's going to take. It might take years for them to fix this, issue. And here it is it's a completely separate manufacturing process from a completely different company.
So I'll throw you a curveball, Scotto. I don't think that the third-party manufacturer has to pay anything, and that's because it did not fail at the required. It met the required expectations. They said that it failed when they over pushed the tank, but they didn't think it would fail at that point. So the third-party company delivered a tank that was working according to technical specifications. And if you F around and find out outside of the technical specifications, that's kind of on you,
Now, I didn't hear that part. I'll have to go back and listen. So they stated that it did meet kind of the operating window, but just not. Okay.
It didn't have enough margin, I guess, that they wanted.
Got it.
Yeah. And one more point. So this thing on the backlog that they're expecting to use 37, we sort of, or I understand it as, okay, the next year's guidance is 680 million, but I calculated that they do give a guidance for Q1, and that is 180 million, and that is, I just checked, 46% higher than Q1 2025. So clearly we can't use the backlog number as a guidance for next year, because we're starting off with a 46% growth. So I think math is more, it's likely we hit over 800 million and maybe even 900 million depending on how the year goes.
I think it'd be hard to get to 900, but I mean, maybe. I mean, it'd be pretty tough, but 800 I feel like is within our reach. I mean, you think about it, we just closed at 170 odd million in the fourth quarter, and if you just do a 15% uplift on that, you'll be over 200 million, and I'm fairly confident we'll be able to see over 25% growth year over year. That's based off the increase in outputs that you'll have from all the different satellite contracts. So
yeah, cool. So I think that's it about Rocket Lab earnings. And then Scotto, do you want to tell us what happened with EOS Energy and what's the other one?
Shift 4. Shift 4. Well,
if you feel comfortable talking about it.
Oh, absolutely.
If you don't feel comfortable, I will bring up the Canada losing the hockey gold to
No,
USA.
No, Shift 4. I don't honestly. Shift 4 is kind of weird to me because they're already trading super cheap, and then to see them down 18%, I don't know. And
a gift.
Honestly, yeah. I actually broke my 3-day rule with both EOS and Shift 4 today. I didn't buy a lot by any means, but I did add to both positions. Yeah, EOS down I've never seen a company down 38% while simultaneously announcing a 7x in revenue year over year. Like that's, I don't know.
That sounds off.
And it's sort of those things where, yeah, I mean, I think they definitely should have revised revenue downward, but I'm also kind of like, it's one of those quarters where I'm like, yeah, it wasn't the best earnings, but it wasn't like a negative 40% earnings, you know? So I don't know. I'm still cautiously optimistic with them, but yeah, fun times. And this is why I diversify.
Yeah, Shift was even crazy too, right? Like I don't understand. They're continuing to deliver well, and it seems like they're still getting hit. So,
doesn't it feel like the payment processing companies, like also PayPal, is like ununderstandably like undervalued or not given any? Isn't that like a sector thing that people think it's a commodity to process payment? Or I don't know.
I think so, but it's one of those things. It's like, you know, fintech was super sexy until it wasn't, and now it's just like, it really reminds me of space, like kind of when a lot of us kind of started like talking, it was just kind of like all space stocks were just garbage. You know what I mean? But we were kind of here like, hey, there's a couple that aren't complete garbage, right? You know, there's that you got your Astro over here, but then like you guys heard of Rocket Lab, because they rhyme, but they're very much not the same thing. And then, yeah, you kind of look at Shift 4 and you're like, are we sure that like a price to sales of 0.5 is fair? Like, come on now. And not even that. It's like, it's not even to just, because, you know, there's always that asterisk of like, you got to look further than the price to sales. Like the price to earnings is 12. Like the price to free cash flow is 5. It's just, I don't know, no matter what way you look at it, it's just kind of a, anyway,
and growing, like it's not a
like 25 like and sure, like they got the acquisitions and stuff, but they're still growing like 20 to 25% organically. So I don't know, man. Anyway,
yeah,
this has been the Shift 4 stream.
Yeah, I think four, you know, you're getting to that point where it's like you can't get much cheaper in terms of like valuations, right? Like you're kind of hitting a bottom point. I mean, I thought about buying, because I hold so few stocks, right? Like it's tough for me to like want to add more, but like you see things like this where you're just like, dude, like it's going to continue. If they're able to continue this pace, like why would anybody pay less than 4 or 5 times free cash flow? So it's like, if they're able to increase it by 25%, it's like you have a floor almost of, you know, 25% growth. And yes, of course, stocks can always go lower. Like you can always, but when you're delivering like this, it's hard to think that eventually, you know, you don't have a turn.
Yeah, man. Yeah, weird stuff. I'm also seeing a couple questions about Redwire. Their margins weren't what I was hoping for, but revenue and backlog I was pretty pleased with. I actually haven't even heard the Redwire call yet, but I did go through the earnings last night. So yeah, that not too bad for Redwire. I'll have more to say on that later on.
Are they talking as a combined company now, or are they still split? Is it still like pro forma?
They're like, well, they're together now, but they're keeping the revenue split in the way that like Rocket Lab splits like launch in space. So it's really cool that you can kind of have the history of like how have they been doing before the merge or the acquisition, and how are they doing after. So that's really cool. But yeah, not the worst quarter for Redwire, but when I finished going through things last night, I saw that Redwire was down, I think, negative 6.5%. So I was kind of like, oh boy, like here we go. And they ended up 13% today, which was quite the relief with EOS and Shift 4 in the portfolio as well. A little bit of saving grace.
Well, luckily, doesn't seem like Rocket Lab will drag you down too much, because it was up 3.5, but then down 4.5. So pretty much flat, you know?
Yeah.
Pretty much flat.
It's such a high volatility stock that you're like plus 3% minus from that. That's flat.
Yeah.
I mean,
You're like, oh my God, it's down 5% after hours. It's like, well, it's up 3.5%. So, I mean, price is not seen since yesterday. So yeah, I'm curious, man. I mean, it really just goes back. I think, and it just goes with every stock as you mature. Like, I feel like now it's the point where the easy money's been made with Rocket Lab, and I don't think you're going to see another 500% increase in a year again, right? Like,
never say never.
Yeah, I guess never say never, but I think that the rule of large numbers helps, I think, to an extent. But I mean, maybe you have some great catalysts like Neutron launching, return on investment mid-year, some catalysts associated with EBITDA positivity towards the end of the year, trending towards cash flow positive by the end of the year, early next. So in that particular case, I mean, I could definitely see where this company goes and tries to make its run at, a $75 billion market cap, going into next year somehow. But I still think that there needs to be really firm delivery on Neutron before that you really get to that $75 billion mark, and that would be $150 a share. So maybe some wins in Golden Dome or something would really push it over the edge. But to me, man, I think it's just a waiting game. Like, I think the company's doing really well and firing on all cylinders, and there was a small mishap. So
I'll give you a way that I can see a 5x very soon in Rocket Lab.
Like within a 12-month period, or within?
Yeah. We go down to 30. And then we just come back up to 100.
I mean, that's very fair. That's very fair.
Yeah. Oh, we never know. We never know what happens. Okay, cool, guys. I think this was a very good call. I enjoyed it. And hope to see you guys in 2 days on the weekly when we talk more about the earnings.
Yeah.
Sounds good.
Awesome. Thanks, everyone,
Thanks, guys,
for being here.
Cheers.
Yeah.
Thank you all. Bye-bye.